Welcome to the Breakfast Club. Here we are back again after a long trip, after enjoying some time with the family in merry old England. It was a great time. So cheers and welcome back to all of you folks out there, you crazy day traders. Welcome, welcome. It's good to be back. Let's have a look at the markets, see where we're at as we stand right now. And let me just make sure everything is working. And it is. And no one's... Oh, there's Hadi. Good morning, Hadi. How's it going, buddy? Good to see you. And congratulations on your new show. I'm happy for you. And all you folks out there, I encourage you all to go see Hadi. Check out his channel. He's doing some trades, making some awesome trades every day. So, man, it's good to be back, and it's good to hear that people are progressing and helping each other out there. And Hadi's trying to do that by creating his own channel. So that's awesome. I fully encourage all of you to get out there and keep creating, keep learning, keep teaching some people, help them all out, and just keep moving forward in life. So I'm happy for that. Congratulations, Hadi. Way to go, buddy. Yeah, it's good to be back. All right, let's have a look at the markets, my friend, and see what we're dealing with here. So, so overall, I'm looking at this. I'd like to see us retap that daily fair value gap below us. I'd like to see that come back and just give that a little kiss. And that's probably around 170 overall. We have 4 hour. There's a 4 hour discount array below us, our discount box, but we are bouncing off. We did bounce off that new day opening gap and went higher. We went to the rejection block and halfway into that, well, at least into the rejection block on the 4 hour. And now we're getting a nice little pullback. So I'd like to see us continue to run back into that new day opening gap on the 18th and see if we can't pop through that and get back into that discount array on the 4 hour chart. And let me just show you what that looks like. So I'm looking for this down here. So there's a bunch of things that have to happen first before you get way back there. So don't jump the gun on me here. I'm just kind of eyeballing some stuff. So first of all, we've got this little breaker here that breaks this little low. If we would have had a return back into its close here and then went higher. We have a little fair value gap here. We closed above it, came back, hit it higher. So we're looking for this to go higher. If we come back through, we'd have to close below 3 or 238 on a close, 235, something like that on a close, and then come back in, use that area to continue coming back into here. So there's a bunch of things that have to happen first before we get back down into this discount array in the daily, which is what I'm looking for. So ideally here on the 4 hour, we have to get down below this discount array here, and then see if we can use this break in market structure here to continue to run back into the discount portion of the larger range here. That's what I'm kind of looking at. I'm great, Hadi. Thanks very much for asking, man. Vacation was awesome. Africa was absolutely amazing. I can't describe, other than I have a deep respect for the people over there in Kenya and how they're working to survive, and they live in the simplest of terms, and they are happy. They look happy. We went to a school there. We did a donation to a school in the Masai Mara, and it was unbelievable. It was such an emotional event. We went in there, and they were so welcoming. The kids were amazing, and they did this they had 16 of us, and we were on the stage, and they came and they gave us these necklaces. I always treasure this necklace. I have this cool necklace they gave me. And we weren't expecting any of that. We were just coming there to look to give a little donation and help them out. And they did this amazing dance for us. Like the girls came out, the girls all dressed up, and they did this traditional Masai Mara dance. And then the boys came in, they did their dance. And these people are into a competition. They did an amazing job. So we were just like brought to tears by their performance. It was absolutely amazing. Absolutely amazing. So it felt really great to be able to go down there and to see these kids just putting their heart out there and dancing. And they won this competition. Like when we were there, we just watched. They've just finished entering into a competition and won, and they were going to a regional competition. And we said, oh, please keep in touch with us and let us know how you're doing. And Benson and his students there, they won that competition. Then he went on to a big national competition, I think it was. And we just got a text message from them a couple of days ago saying they won that as well. So we're so proud of them. We're absolutely stunned by how friendly and kind and happy they were. And we were just so honored to be there and to be in that experience. It was just amazing. Anyway, and then to be on the Serengeti, we took a balloon ride on the Serengeti. So you get up in the morning and you're this like dark, and you catch this. They set up this balloon for you, and then you hop in it, and it's like pitch black, right? And then you start to lift off, and the sun. To picture this, the sun is rising in the east, and the balloon is lifting off the ground. And then the sun comes out and you catch this amazing scenery, and you're floating there in the air. And then you look down, and then there's this lion kill. They just killed this water buffalo, and they're all feasting on this water buffalo below you. And you're like, that is amazing. And he takes you up to like 3,000 feet and then comes all the way back down. And literally, I had my 360 camera, and it was just dragging through the grass. And then he took us back up another 1,000 feet. Like the pilot was amazing. And then you land in the middle of the Serengeti after about an hour and 15-minute ride. And they've got this giant buffet set up, and you're literally sitting in the middle of the Serengeti eating breakfast. It was unbelievable. And just to stare around you and say, man, I can't even describe it. It was just such a beautiful thing. Such a beautiful thing. So anyway, yeah. And then Norway was incredible. The mountains, the fjords. Oh my goodness, what an experience that is. To see those people in Norway, super friendly people, typical Vikings, and then see the mountains and the waterfalls and the like blue glaciers, like super crystal blue glaciers. Oh, stunning, stunning, absolutely stunning. So yeah, and then England was great. We went to Oxford, we went to London. We walked in the same shoes as William Shakespeare in a pub that he visited. It was the history. I got to see some of the medical stuff, the brain, the circle of Willis in the brain. I got to see the room. The guy actually discovered that. So I'm really big into history. I love that kind of stuff. So it was an amazing trip. And to be with the family and celebrate my 60th birthday there was unbelievable. I love my family so much. And if anyone of my family is watching today, thank you so much for the lovely trip. We love you all. And anyway, let's get back to work here. Let's see what we're doing here in the market. So welcome, Bench Trader, welcome. So where are we at here? Let's go back down into this hourly and see what we're doing here on the hourly. So this 265, 260, where are we looking for? Right there, 265, 266. I want to see if that gets closed below. If we close below that on the hourly, then I'm looking for a deeper run down into that 4 hour. So my overall objective is to go a little deeper and get down into here. Got to get through this breaker here first. We take this breaker out, and if we close below the mean threshold of that breaker, I'm looking for this candle and this candle along with the breaker. They're all kind of lined up here to close below them, come back and use them as support to continue to run down into this discount array here on the 15-minute chart. And if we can get below that 15-minute, and then we're going to continue on the downside and look for deeper run back into the hourly that we were talking about earlier in the 4 hour. So that's where we're looking to get going. Hans, good morning, my friend. How are you? We had some really good trades over there in England. Trading the British time frame, the VK and Hans, and I can't remember the other guy. Was it Isaiah? VK and oh, what was his name? It's gonna bug me now. Ali, thank you. Yes, Ali. Ali, he was we were catching some dynamite trades on the DAX. So I'm going to kind of roll through some of these and see if we can't get an overall consensus of where stuff's going. So where do I have ES going? I got to make sure I've get, oh, these are all on, you can tell they're back in the, when I was in May, we're definitely on the wrong one. So let's go to ES on the September. I hope you guys have had an awesome summer so far this year. This has been great. So if we're looking for this run up into this premium level, we've hit the premium array already nicely. We haven't had a body trade through it. So, and we've just taken out these relative equal or these equal highs here into the premium array. And now we're looking for a run back down. So what I want to see, we'd have to get in the market structure shift on the hourly. You'd want to see this lower section get taken out and that return through here on that SIBI. I want to see that SIBI get broken on the downside, come back in, find some support at that, and continue to work the mean threshold of this candle, and then start working lower. So that's ideally where I'd like to see. It's got to break through a couple of little things here. So if you're pulling the overall range right now, pull the range from low to high, look for 50%, and see if that holds, which should be around 50% of the breaker here. If it takes 50% of that and closes below that and takes out this BISI, then we're looking for a run into the lows here. And if we get a body break below that, then we're going to look for that to continue to push lower. That's the hourly on ES. Mr. Dow Jones, Mr. Jones. Let's look for September contract here. So this I want to see stay open. So if we're coming deeper into this range here, I'm looking for a premium box. So this is on an hourly chart. So this is going contrary to what we want to see in ES and Dow and NQ. So I'm looking for that as an upside box right now. And if we can clear that in this breaker here, then I'd like to see not really a breaker. We haven't broken below anything here. There's no swing point in here. So I'd like to see us get above these two candles here and keep pushing higher to take out relative equal highs and continue pushing higher. If we drop down below, again, mean threshold of this candle, 44,604. If we drop below that, look for a fill of this fair value gap here and a return back into here. We take that candle out, come back, find support inside here, looking for a run back down into the mean threshold of this candle here on an hourly basis. So we've got ES done already. Let's look at some of these. We're back into this. If you're looking for natural gas, we're back into this breaker here. We've bounced off of it. So if we reverse and come back down, take out this candle, close below it, then I'm looking for a return back into here, and then hopefully a run back into it. Premium price imbalance, so we can catch along there. Don't forget it's summer, so July, there's always expected to be a high or a low occurring, you know, technically in the summer months. Usually one begins in July. We get a little retracement into August, and then the August sets another mid-low or new low, and then we get run back up into September. Then September drops down into October, where we make another low, and then we get a run up for the rest of the year. Or as this year's been climbing higher, that whole reverse scenario of that will happen. But we're looking for specific turning points in July, August, a little bit in September, main one in October, and then continue out for the rest of the year. So we'll see how that kind of plays out from a seasonal tendency. You are on month June. Which one am I on? Is this on June? No. All those are back there on September. Sep. And sep. Yep, those are all good right now. Copper. I'm going to cut back on the number of assets. I think it's like 50 assets or something like that. I give you guys a review on every morning. So if there's something specific you guys want me to look at, I'll be more than happy to do that for you. But I don't think I'm going to give 50 asset classes. And gold. I'll get to gold in a second. HNC and Goliath Resources. Wow, they did a nice little retracement. They're right back up there again, hey? I'm out of that. Done, Goliath. Crude oil. So let's just wait for this commercial to end. There we go. Let's skip that. Okay, crude oil. Hourly. We got to see it get above. For me, it's got to get above 67.38 on a close. But the problem is that you're already way up inside this range here on the hourly. So if you want to see any further run higher, you've got to clear this hourly candle out on a close, come back, find some support at it to push back up into this higher portion, into the SIP in here, and potentially 68.12, 68.13, somewhere around in there for the upside objective that I'd be reaching for once we break this hourly candle here. If you're looking for a 15-minute, we've come all the way up inside here. So you always have to kind of look at this as that bull trap versus the bear trap. Now you've heard me talk about this in the past, but a bull trap is when we start to have a small range like this. We have a little, right here, we have a small range. We have a little fair value gap. We've traded above it. We trade inside it, and now we get our entry, right? So now you start to go long. You're inside here, so you've got to trade between that high and that low. Take 50%, 62%, your take profit model 1 that we use to run inside here, right? Because if you can get up into the mean threshold of that, and we can start to close above the mean threshold, I start to eye the potential for the relative equal highs above here and the premium array above us here. But if you see this run up here and you're not paying yourself on the way up, and then all of a sudden it suddenly reverses on you and starts to come back down, that's your bull trap. It has to clear here to go bullish. So if you want it to go bullish, it has to get above here and then start running above this premium rate for range extension and continuation. So we've got to get above that premium array. So you can get caught in a bull trap, which is like, you see this big candle here is now ripped all the way back against you, and you go, oh, I thought it was going to run for these equal highs here. Mean threshold, that's your kind of idea where you want to see if it continues to go higher. And you got to pay yourself inside there, because if it doesn't and you constantly keep looking for that, now you've lost an entire hour or 15 minutes of profits where you didn't pay yourself, and now you're all the way back looking for the continuation. You're hoping for a continuation there. And if it runs back through this level here, this will be a continuation through that low and go lower. So bull trap. So watch for bull traps, bear traps. Bull traps must break the mean threshold and take out this high on a close for it to continue going higher. Otherwise, trade inside the range, pay yourself inside the range, wait for that extension or a market structure shift, and then continuation on the upside. Very important. You always kind of remember that. Ali, my man, how are you? Good to see you. We got some really good trades over there in London or in England when we did the DAX. Where are we at here? That's oil. Let's go to the DAX. Oh my, look at that. Remember when we left, when last we left our friend here, Mr. Mosaic, we were talking about that. I remember when we were talking about this back at $22, and look where she's sitting now, 36. You would have 50% return on your money already in a couple of months. Egad, dang. Zoom. Yeah, we're not going to talk about Zoom. So let's talk about DAX daily. So we are in premium discount. Ask yourself, where are you inside? We've traded up, ran right into the premium, reversed, come all the way back down to the discount, and we're sitting in on a daily basis. Oops. Just under 50%. So insert this internal range, you've got the premium right here. You've already dropped below it. Let me get this out of the way. So you can see how it's compressing right now. You've got premium level here. And then you've got discount level. I'm going to move this one. This one's overlapping. So you've got one here inside this one. So you could use the larger one for now. And then see if we can get down to the lower range. So from here to here, you come back to 62% perfectly. Bing, you hit it nicely. We traded below the premium. We set the premium, traded below it, came back inside it, went lower. Where did we go? Through 50%. Pay yourself there if you're trading internal range liquidity. No different than what I was just telling you guys about with the October or the oil. Internal range liquidity. If you see the entry to go short, you take your entry here. Stop loss would be sitting above your premium rate, because you don't want to see it trade through it and continue going higher. So you're above your premium rate. It starts to go lower. As soon as it hits 50%, pay yourself, move to break even. Then it hits 62%, pay yourself, move to 50. Comes back. You just nibbled a little piece of action out of here on a day or a 4-hour chart. You nibbled a piece of action out of there, and now you're just kind of waiting. If it trades back into here, into the premium level, again, that's a short. And if it continues to go lower from there, great. If it starts to close through it or run through it, get out. Close your trade and wait. Move to the sidelines and wait for something cleaner on the lower levels. So yeah, anyway, that's what I'm looking at for DAX. So you could have nibbled a couple of things there for a couple of hours at least. You would have made some money in there. So you're in the middle of that range. You're back into that 50% area. So it's a wait and see game. Go down to the lower time frames and hunt for premium and discount runs if you want to catch some smaller, quicker trades. Look at this gold. Ooh, gold, you're so cute. Gold, I was trying to go short here, and then it came back. I didn't want to see it take these highs. It did, and I was already in bed by then, so it had come all the way back down into that breaker right there. Beautiful trade. Catch along. You got a reverse direction here. You didn't get a retap, so you look at this candle. The candle's immediately to the left of it, which is right here. You trade above it, come back, give it a tap, continue going higher. Aim for high, high, and then wait for the next reversal. Here's your premium array or your BISI. It doesn't trade below the BISI, so you're still in that trade. You want to see it close above here. It does. Closes above here. It does. Comes back, gives it one little kiss here, and then continues marching higher. So textbook run, if you know what you're looking for, of course. Ooh, I'm in this trade. I've been in this trade for a while. I'm going to move to, holy, that's doing very well. Confirm your order. Yes, indeed. Sorry, I'm just going to, I'm in a short in NQ right now. I'll get back to that in a second. I'm aiming for that objective I told you guys about. Where are we at here? DAX, gold, Bitcoin. We've had some fun with Bitcoin. Had some real nice Bitcoin trades. Anyway, here, look for, see how this reversal happens here? Look for an opportunity to return into that. It doesn't. Look for the next opportunity. So right here, we trade through it. We don't come back into it. So we wait. And if it continues to trade through it, they go, great. Now I'm looking for an opportunity to get in here. You can't get that. You look for this one here. Do we trade through that? Now you're look at that whole range you're in and you say, I've missed an opportunity unless I was on a lower time frame to get into something here or something inside here. If you can't catch those, then it's in a quick rundown and you're into greater than 50% of that range. You're buying a discount hoping it's going to go lower. You wait for something cleaner to set up. So in terms of if we break market structure, as in right here, you look for a return back into this area right here. You do not want to see more than 50% of this consolidation here get taken on the upside. Comes back, found some support at that, and now you want to see it continue to come lower. So I wouldn't want to see this get traded through anymore. It's been traded through there. Now I want to see that hold, come back, use this as support, this SIBI, and continue to push for this low, then run back into this discount array here and back down into here. That's what I'd be looking for Bitcoin. The bank's on fire. We're catching some serious waves in banks. If you got into banks, I got into those back in March, no, May. April, May, and they're doing delish now. Look at that. April, May. What a turn. Anyway, banks are doing well. Gary, enjoying his new Mercedes. Good for you. I hope you're doing well as well. I enjoyed the night out last night. Thanks for that. It was great. I enjoyed the company. We got pretty tired. We're still kind of jet lagged a bit. We're up at 4 o'clock this morning, wide awake. Look at Disney. Where's Disney? Look at Disney. Holy cow. Remember when we were down here talking about this back in May? Look at this. Reverse back into the consolidation. We have a displacement candle right there. Pops above, comes back into our consolidation. Cam Model 1. Wait for that high to get taken. It does. Pop up. We don't get an opportunity to get in there. It just keeps running. Comes back into, look at this range. Look at the range from here to here. That's where I'm going to be looking for. So watch there. Right there. 50%. Bang. 62%. Bang. Nails it. Look for reverse change in direction. Watch this high get taken. It does on a close right there. Come back. Look for this premium array here. Trades above it. Right there. You still don't get in on it there. Look for this old high here. Body trades above it. Come back. You get one little tap on it right there. You have to see this blow up. Look at that right there. Gives you one little pop above, comes back, gives it a kiss, and then starts running up higher. You gap through it. Look for reverse or change in direction. Market structure shift. Market structure shift right here. Drops down below it, comes back up, hits the low, continues coming back inside this larger range here. You have to use that higher one. And we're already sitting around. Oops, wrong one. 62%. Nope, 50%. Change in direction. Body trades above this, comes back, finds support inside here. The bodies are holding onto it. Watch for that high to get taken. It does. Can we trade back to it? Nope. Takes out the next high. Reverses, comes back into this internal range, hits back on that little. Remember, I always tell you guys, if you're looking for this SIBI here and you're looking for a break in or change in direction, we want to see this change in direction, come back, find support at this. You want to see a market structure shift. So look to the candle to the left of it. Look for that bullish candle to the left of this SIBI. It's right here. That's your breaker. Takes out this low, runs lower. Now you want to see that breaker get taken to the upside. Come back, either re-engage the breaker, use 50% of the BISI. There's a fair value gap that occurs above this level. I like fair value gaps that occur above. Comes back inside it, finds support right at that breaker, continues to push higher. So now what you want to see is this level here, give way, that candle, break in structure again, and continue pushing up into this premium box up here, if you're Disney. Stellantis. Remember when we were talking about Ford back here? Look at this. Look at this deliciousness. I was just 4 cents off of nailing this one. That's where I wanted to get in, just off of that there. Looking for, look at that, 12 bucks from 8 something. That's a 50% return on your money. Hello. Now we've got change in direction. Change in direction. BISI traded below it. We came back into it. Now we're going lower, looking for this discount array. So I'm looking for Ford to get back into this area here. I'm looking for that area. For Ford, Stellantis, I still want them to get down. Dodge, I want to see them get down into this discount portion around 7 something. I want to see us run these lows out. Still short on NQ. Wheat premium, you trade below that level. See that right here? You trade below it, you come back up inside it, go lower, take out that low. Now you want to see this SIBI get used to go roll over and come lower and take out this mean threshold. If we close back above this level, then we're looking for a run to the rejection block and back into this premium array up here if you're looking for wheat. It's the same kind of setup over and over again in all asset classes. It doesn't matter. Whatever I'm showing you here is the same thing every single time. Bench trader, look at NQ, look at those levels on the hourly chart. Hello, Rishlu, my Russian friend. Rishlu, I haven't seen you for a long time. How are you doing, man? Good to see you. And Russell, good morning, my friend. Welcome. Soybeans back into this level. I like to see if this level holds now and see if we can come back through here. Let's see if we can run back deeper into this range here, this little SIBI. We've already come from the premium level to the discount level already. Now you're looking for internal range liquidity, this range here. We're back up into the premium. You want to see that give way because there's no real discount down in here that I can see. Nope. I want to see that level right there at 10236. Get closed below. If we can get below that, then I'm looking for a run on the liquidity here and get all the way back down to 9936 for that guy. Coffee, I'm not going to get into too much of these. None of you guys have been big fans of my commodity stuff anyway, so the pound, the British pound, those are my Forex people. We got Forex guys in here, guys and gals. What do we got for British pound? Okay, I like this order block right here. 1346. 1346. I don't want to see you lose 1346. In other words, I want to see this BISI here that we've just created 2 hours ago. I want to see that, or a portion of that, stay open. I don't want to see the whole thing close in. So even 134618. I want to see that bottom 25% at least stay open. Ideally, mean threshold of that BISI, and then continue to go higher. Take out these equal highs above us. We got 3 of them now. Run higher. Dollar index. Dollar index, we're bouncing off of that premium or the discount array there. Inside the gap. I want to see that roll through 9705. Yeah, I want to see, let's get through 9712. As if we can't close below that and then start digging back into these weekly inversion fair value gaps down below us here. That'll give the pound the nod to go higher. Australian dollar, look at the choppiness in there since we left. Wow. Not fun to play that one. Euro. Let's have a look at Euro here. I like Euro for 116,764. So just above where it just came to. You could see that come down to 116,489. Again, I want to see a portion of this stay open for that to continue going higher. We do not have a fair value gap above this high. So for this one, you don't want to see any more than 50% of that get filled. It loses more strength for me if we start to take out more than 50% of that BISI before going higher. Japanese yen. When last we left the Japanese yen, I think we were in here somewhere. Yeah, inside their discount goal. We're just banged around inside that. Now we've obviously dropped below it, come back into it. Now we're looking for the lows to get taken. And then I run back into this little discount dude down here. What do we got left? Silver. Remember we were looking at silver? That was our upside objective for the next leg. Look at that. You guys got that on June 10th. When I was down in Africa, you guys had finally got your silver run we were looking for. Look at that. Right off our level. Like, how lovely is that? That was a level we were looking for. And it literally came back, gave it a little kiss. How did it come back there too? Oh, look at that. For some reason, I had that level. Not sure why, but you guys are here. You saw me put it down there. So very sensitive level. And then we're continuing to go higher. See that portion of this stay open. I want to see that keep pushing higher now. Find support here. Get a close above that, opened above. I'd like to see silver keep coming up higher now. Well, we finally got that objective. It took us a long time to get there, but done. Some other assets I'm in. Good. These are really good. Good. Looking for 1460. Those are all good. All right, let's get back to the, I'm in a good trade here. So we're still looking for this. My goal was, so no, I just want to point this out. So this is why we were looking for that 4-hour goal, right? Let's just go back to that 4-hour goal. So my 4-hour goal, we said initially we want to see it get through this discount array, and see how we're starting to trade through it already. So I'm looking for a rejection block on the 4-hour. You're back inside this candle right here. So that's right where your rejection block ends, is right on that breaker that takes this little low out here. And then I want to see that halfway point of this give way, not just sweep this and then start running back higher again. If it does sweep that, I want to see this 4-hour SIBI. If we close below it, I want to see that used to push the price lower to get back into this discount range here. That's what I'm looking for. Abs, my man, Abs, how's it going? Good morning, D. Glad you're back. Hope you had a really nice vacation. Been doing a lot of landscaping at my end. Like, fun keeping me too busy. Yeah, that's hard work, man. Landscaping's tough work. You be careful. You don't want to crack them little hands of yours, those gentle hands, the soft little hands. Not that I know if they're soft or not, but you shake a man's hand, you can feel. Kevin, good morning. I'm moving my stop loss now. Let's look at D, you look younger. Must have been a great vacation. Thank you. Thank you very much. Yeah, it was great. I get a little bit of color down there. It was nice. I had so many wonderful adventures, and I really enjoyed sharing that with my wife, my fiance wife. What do I say? I always call her my wife. But the proposal, the balloon proposal, well, it happened beforehand, but the balloon, when we got up in the balloon, I was like, remember that proposal I did for you? And this was the moment. Here it is, baby. She just laughed. Anyway, you guys, I don't know, some of you guys know the story. I'll tell that later. But yeah, so now we're engaged. But I call her my wife. She's been my wife we've known each other for 11 years. So finally, I went out and I did it. I pulled the trigger, boys. I pulled the trigger. And couldn't be happier. So anyway. Where are we at? So there's the 4-hour. We're going to come back. I look for, you can see this run all the way back into here. I'm okay with that. For a 15-minute NASDAQ, if we come back into that level right there and then roll over and come back down, I'm okay with that. I am okay with that, because that, think about that. Watch that level right there and then watch here. Swing and swing. Look where 50% is. Bing, right here. So if we can see 50% return back into here, I'll be looking for a run back up to 253, 252, roll over and come back down. So this would be a next price leg lower. So if I'm looking for my next price leg below here, if you're going to kind of predict where you want to see it end up, 193. And what did our 4-hour chart tell us 193 looks like for us? 193 is right back into this level here, and it puts us right on 193. Puts us, remember, a rejection block, 193 right there, right into the rejection block. So if the next price leg will continue from that level lower, I'm looking for 193. That puts me right in line with that there. So that's how I'm kind of just slicing and dicing it for you folks. So that puts us back to 252. I'm not giving up that much profit. Yeah, I can see that coming all the way to there. I'm going to close that position and I'm going to wait. I want to see if that comes back in there now. So yeah, I close that position. I'll show you on the 1 minute what I mean by that. So we have a consolidation. We have displacement above. We can come back to this consolidation and push for that level up here, which is 248 to 252, 248 to 252. We have a little consolidation, fair value gap, swept these lows. We get a trade back into this level. I want to see it tap here, start running back higher to that 252 level and see what we get. And it's 9 o'clock. If this ends up running back through the 252 level, the important thing I'm looking for then is if we close above 252 on a close, then I'm looking for a run back into much deeper part of this range. So if I can get back into here, I can catch a long inside this range, pull your fib tool like we showed you before, pull your fib tool from here, and you're trading internal range liquidity. So if we can get back down into here, as long as we don't break that level, if we close below 228 on a close, look for a run below the low. So if we just come back into the consolidation, CAM Model 1 entry for a 50, pay yourself at 50, move your stop loss to break even, 62%, pay yourself there, and just start scaling yourself out on the way up. If you break this level on a close, then use that for support to come back up into that premium box we have way back up in here and that 830 open. That's what I'm looking at. And on a 5-minute chart, you can already see fair value gap, traded above it, come back inside it right here. And that low coincides with return to the consolidation. We want to see this stay open as a breakaway. Okay. I'm going to see that go higher. You thought I was married the whole time? Well, you know, I love the woman, so what can I say? Congratulations. Thank you, thank you, thank you. Welcome back. Gavin Nemo, thank you, thank you, thank you. It's good to be back. I miss the family already, though. They're a great bunch of people. All right, come on, let's go higher. This is good here. If you look at this 50% of this range, I'm going to blow this up so you guys can see this. So kind of like what you want to look for. Ideally what we wanted. I'll leave that there. I'll just put a box in here. And this dot here, we're looking to see if that lines up with 50% of that little range there. And you're going to include, no, we'll just do this right here. So there's 25%. So we didn't hit 50% of that BISI. 25%, and we start marching higher. That shows me more strength to want to run higher versus coming lower. If we really get a big deep dip into here, come back in and a run back down into that breaker and this SIBI here, that's ideally where we want to see. But if it just comes back into 25% of that BISI and then keeps pushing higher, that's going to be much more aggressive. So again, I'm glad I'm out of that trade. Otherwise, I'd be giving back a lot of profits that I got in from the run down lower. So we're just going to wait and see what begins to manifest here. Because if this is just a sweep on these lows, and we've come back into the mean threshold of this last down close candle here. There's our mean threshold. There's also volume balance on the 5-minute. Let's look at the 5-minute here on a bigger scale. So look right here. So now I want to see if this right there holds price, and it's right at 50% on the 5-minute. So let's see if we close above that. Again, we're going higher. Then you look for this one, and then this one, just keep looking back over here at these SIBIs. They will either provide support and it will come back lower, and that's the next price leg continuing to come lower. And then we go into a 1 minute chart and we look for a reversal off that level. And so if the reversal would be change in direction, come back in, find support at that market structure shift, break through here, your internal range liquidity. So you want to see an entry here, get below here, pay yourself at 50%, 62% on the way down. Oops. And then clear this one out, and then we continue going lower. That's our next price leg lower. If we close above this level, and the fact that we're even poking up there already now, look for this level, and then look for these little 5 minute jobs over here. Sorry, where are they again? Let's look for these. So look for sensitivity in these levels here. So the fact that we broke above that one, find support here, here. Internal range liquidity, we wanted this thing to go higher, and the higher we're getting. There, all the way up to there. There's 50%. 23,252. Yes, it lines right up with our 50%. This little volume imbalance right there. So this one you don't get a chance to get in on. This one here, if we continue to push through it, come back inside, find support at that. You want to see that keep pushing higher, or this volume imbalance as well. You come back inside that, push higher. But now you look at that internal range that you're in, you're already into the premium level already. So you're paying a premium price to go higher. So unless you want to get a nice discount to go higher, you don't want to see that level get taken on a close. And if you're looking at my Tibbs thing, 9 o'clock is your turn. And look at that right on the 10. That's a 10. Look at that. The 9:10 turn in a 9 o'clock hour. If you're using the Tibbs, you guys are still even remotely interested in Tibbs. Yes, has hit the discount I was looking for there. The 1 hour discount. Look at that discount rate and ES here on the 1 hour. I just wanted you guys to see this on the 1 hour. So I was looking up here earlier. I've got it marked over on my other charts here. Look at this one here. This premium array. That premium array, we traded back up into it. And then you want to see if we come back into this whole range here. And the discount array is sitting right here. Right there. So we come back inside it. Now you want to see if we get back through this level or down below that level. If we drop below here, like I mentioned earlier, if we get below this level, we have a market structure shift now. You've in this little internal range of liquidity, you've gone from box to box. On that little quick little hunt inside this range, box, box, done. Now you want to see, you wait to see if we get above this level or below this level. Look for 50% as my next target. If you close below that, look for the rejection block in the low. So this internal range in terms of the hourly, if you're looking at that range that you're in right here to here, then reversal. You wait for a body to get above here. It takes the low. Oh, what's the low of that candle? $39.75. Low 39. So there was equal lows there. Look to the candle to the left of it. Market structure shift to get above it. Come back inside the candle. Go higher. Next one is here. We get a candle close above that. You want to see the next push. Well, we're already through this level already. Into the premium level up here. Have we hit the edge of it yet? Yes, look at that. Right there. There to there. Right there. See how you've tapped the edge of it already? That's box to box. From this box you didn't get a chance to get hit on. It ran all the way through it. Came back through. You have a new one here. Swept this low. SIBI. Body trades through it. Look for the candle to the left of the SIBI. This one. Trade back into it. Go higher. Box to box, which is the next box is here in this small range here. And then larger range, you've got this guy here and then that one up there. So you want to see this level get support at it. And we want to see this one get eaten through, find support at that, and start running for these equal highs and looking for that premium level above you here. Oops. Look how many times we bounced off of that going down. So the bull trap is if we do not close above here. So people think, oh, equal highs. If we don't close above that, those equal highs aren't going to get targeted. Or you may just see a wick get through there. So there's our pump through. We're into that next premium level above us. Now you were just waiting to see if this closes there. Or that just wick is a quick run on liquidity, reverse, and then come back down again. Hello, Darren. Hope you're doing well. I am, Mags. Thanks very much for asking. There's the wick run on liquidity. Still no body traded above here. We just had a quick run on liquidity back to the premium box here, right into the consequent encroachment, like to the tick. To the tick. So bull trap, we did not close above here. Just a quick wick run into that next premium level. You want to see a market structure shift as a body above that level for continuation. So you just wait and see if it manifests itself, or it doesn't. It rolls over and comes back down again. That's a nice little reverse. So we're stuck between those two right now, waiting and waiting and waiting. So where's our NQ? You want to see a body get through here now. This is a nice, beautiful return on a 5-minute chart. Look at that. You closed above it, came back, gave it a kiss. Your entry is right there for 236. It's right on this precision, as precise as you can get it. So that'd be like entry level 1, 2, and then 3 is a full fill of that. Stop loss would be sitting just down below in your rejection block because you don't want to see that level get traded through. Breaker's taken. So I want to see it return back into this breaker. It doesn't. Now see how we've closed above this level right here? And you come back, you tap it, look for continuation, take out these highs. Now you've got that range. Both those highs have been taken by that quick pop down, run up, take those highs. Beautiful. Beautiful. Hadi, did you catch this one right here? Did you catch that change in direction right here? And then a run back up, break market structure, continue running higher. Broke the premium box, gave you one opportunity to catch it and start running higher. That's nice. You got to trust your arrays though to buy into that idea. So now that 4-hour objective I was looking for, not even in the cards right now. So that's where I wanted to go. But as soon as you start to see things changing up on you, you got to have the time, price to recognize when it's changing up. Again, that's why I closed out the short. When you start to see this change in direction, you go, if we're coming back into that little box there and we stay there, I'm okay with that, but I don't want to give up that much profit. So I'm going to take my money, move to the sidelines and wait and see what we have there. See how it ripped through this one, and that one? Got the intentions on a 5-minute chart to go much higher. Rip through here. Didn't give you an opportunity to get in here, here, or here. That was the only opportunity with precision right there. It's the only one you get for, no, even that one. I don't think I even gave you the entry there. What's the low on that candle? 236. What's the low on this candle right here? Low is 236.5. So half, you missed that by half. So you still wouldn't have got that. If you're looking for precise entry, you wouldn't have got that either. You don't get that. That's intention to go higher. Beautiful. Lovely. So the only opportunity you can catch on that right now is from here. The premium array extends itself. We've closed above it. You come back, give it a little kiss, and it starts pushing higher. So now you're looking for what's another higher time frame objective. So now you got to get into the hourly and see where we're looking for. So we've already taken out that high at 320. So I'm forgetting all about that 4-hour objective right now because you've got to be nimble enough to know when price is changing up on you. And don't marry an idea and say it's definitely going there when we don't know for sure it's going there until we see a change. All right. Sitting on the sidelines. All right. Anybody take that one? Anybody take that nice little long there? That is a nice long right off of there. You got it? Nice. Bench Trader, I assume, is a D. You've changed your name to Bench Trader. I'm assuming that's you. Isn't that what your channel is? Bench Trader? Yes, sir. Okay. So that's a D. So you got long on that. Good for you. So that's what you're looking for, you guys, is you're looking for this opportunity, you don't get it. Looking for that opportunity, you don't get it. That one, you don't get it. Then you ask yourself, I want to see it break market structure to go higher. It does. And you go, oh, if we can come back and tap that, I'm in long. Nope. It keeps running. You go, okay, well, there's the premium array. If we break that, then I'm looking for range extension and I'll look for higher objective. It does right there. It comes back, gives you a little kiss, and then that's it. If you're not catching that for a long, so good for you, Hadi, for that least a little long run off of the top there. But that's exactly what we teach you guys every freaking day. That's what you get to see. So even if you ran it from here at 298 to where you're sitting now is, 30 handles. There's 33, so 35 handles or so, and we're still going higher. So lovely, lovely, lovely. So let's see if where's your next upside objective. So let's look for a 4-hour or this all-time high now. Yep, these are new highs. So enjoy. So what you want to see here is I want to see 50% of this range, no more than 50% of the range get taken, or just the next candle come back, find a little kiss here. Look for 50% of the range, no more, and right there, that's my last line in the sand. I want to see this portion stay open now that you got a fair value gap above a high, and I want to see that just keep marching higher. And if you're pulling your fib extension tool, don't be too hasty though. I think our 11 o'clock reverse with these levels have never been, we didn't get a chance to trade into these. So look for that to return back into here and here. You could see a big reverse coming back in here around 10 or 11 o'clock. This is a 940 candle. That's the first standard deviation there. ES is following. Yeah, so keep your eyes on the idea that we could see a return back into this regular trading hour gap, because we have not had an opportunity to catch any long off of this on a 5-minute, except obviously, no, we didn't even have that one. So we could see a nice big run up in here and then a smash and reversal back at 11 o'clock or 10 o'clock reversal. Those areas, I do not neglect those areas right now. So if we're looking for, I'm just playing with something here. So don't take me, I'm just kind of playing with something. So stand by. I want to see that guy. Gonna reverse engineer this thing here. If we get to 387 and start to see a change in direction, 50% of that will bring us back into this breaker and leave a portion of this busy open, which would be 5%. So we'll see if we can get up into here. Same idea. Body trades above. Comes back in, finds support at this level, push higher. Fair value gap. Look to the order block to the left. Trade above it. Come back inside that high. Right on it. Run to take out premium array. Look at that marching higher. Holy crap. That's a nice run. Holy. What a run. So let's go back to our, yes. Look for these levels now. It was a big blue bus. Or a yellow bus. Depends on your candle, I suppose. It's a magic bus, one way or another. Both sides, man, both sides. The way down and the way up. I didn't get on the way up, obviously, but I did get the down. Now, let's go down to the lower time frames and see if there was an entry down here. So if you're down into those 1 minute range, so we're looking for a reversal on a 1 minute chart. Okay, and then we're going to go down to a 30-second chart and see where we can see a reversal. So let me just get rid of all this stuff here so you guys can see what I mean. Oh, I want to hold that on there because I want to see if we end up reaching for that objective I look for up top there. So reversal. We have a sweep right there, and then you look for the candle to the left, which is the order block here. We look for a body to trade above it. It literally opened at, give it a little tiny tap, leave an imbalance open there, a price imbalance, and then went higher. So you go, still going to wait until I get something cleaner. So you wait for, there's an imbalance right here. There's an imbalance right here. So you wait for bodies to get above these levels. So we got, you can see one sitting right in here. Body trades above it right here. We come back, find us some support right inside that level that we talked about on a 5 minute. Came back, tapped it, and that was an indication to go higher. Whether or not you buy into that, again, it's up to you. Let's go down to a 30-second chart, see if we can catch something earlier down here. So I'm going to go into a 30-second chart. And there's our candle right there. Can you guys see this? There is your fair value gap. We've swept the lows. And then you look for the candle where? To the left, right here. We wait for a body to trade above this level, right here. We wait for a body to trade above it right there. You see that? Let me zoom in so you can see it. On a 30-second chart, there's the body trades above it. And then we want to see it trade back into No more than the mean threshold. Right there. Tippy tappy, and away you go. So there's your 30-second entry right there. See that? Or CAM model 1, we look for a displacement. So this I wouldn't consider much of a displacement. This candle looks like a nice little run above, right? But we don't get a chance to come back into your CAM model 1. So you'd have to look for the rule that we look for our reversal here. And then a market structure shift. When the body trades above it, come back into the order block, to the candle to the left, and then continue going higher. So that's the 30-second. Is there a 15-second one that's even sweeter? Sweeter than Peter. Okay, so nothing here. There's the change in direction right here. Next one. Inside this range, we want to say, okay, so I'm already above that 50% of that range here. So I have to wait for market structure shift. So we have a body trade above it right here. You come back, you tap it right there. 15-second chart, right on the mean threshold, right there. And then you go higher from there. And it's at 9:30, 9 o'clock for 9:10 turn on a higher time frame TIBS. Does that make sense to you guys? Is that helpful? Do you find that helpful or not? Oh, look at the level. Look at that. This reverse engineering thing. Now, this will be funny. If I've reversed engineered this right to the tick, that'll be a great welcome back, Mr. Carter. Darren, could you do DAX? Certainly, Ali, I can do Mr. DAX for you. So remember those levels we talked about earlier? Premium and discount, then premium and discount. See how we've just come down? We've come back into it, and now you're looking for lower. We're looking for this discount down in here. So that imbalance, you want to see if it trades back through 136 on a close. Come back into it, find some support at it, and then start running for these equal lows down here. If it just bounces and starts to compress, you're looking for premium discount, and it starts bouncing around inside here, smaller and smaller. That's a 4-hour chart. So you're doing some quick internal range hunt for liquidity here, because don't forget you're already into the, if we take the larger part of the range from here to here, you're just under 50% now. So you've gone from premium, pay yourself at 50, 62% would be, let's just put this on here. 62% would be the consequent encroachment of that gap here. And it's already digging into that little small imbalance or gap right here as well. So I'd be looking for lower, but don't forget you're at 50%. So you can either go higher and lower. If you can argue both directions, stay out of it. Look for lower time frame stuff to see if there's something better. You can run in an internal range liquidity hunt there with a downside objective being this gap here. That's what I'd be looking for there. Hope that helps. Darren on ES, look at midnight. Midnight, he says. I'll look at the midnight. Midnight. Midnight candle, says Hadi. Look at the midnight candle. Midnight. Yeah, look at that. Bing, bing. Bounced right off of it, hey? Is that the S&P you're talking about, or are you talking about the NQ? I haven't done any of that marking up my charts for the 6 o'clock, or I want to respect my buddy right there. That's our 6 a.m. candle. And then we got our this over here. And yes, I still mark these things up. I know you guys, I've been watching you guys chatting over here, and you're not, some of you have kind of gone against, or not really, not gone against, but just changed up your idea of what you want to mark off on your charts. And that's entirely up to you. And I wish you all well on that. But I'm still sticking with my regular marking up of my charts here on more, and I'm looking for this guy here. And I'm looking for a Monday. And I'm looking for midnight. So that's when it's, I'm not huge on the 4 o'clock one anymore, but I do like the, still keep the 6 a.m. So there's the midnight open range, midnight candle, the first fair value gap. I know it went through me. Here I was thinking I nailed something cool there, but I didn't. So look for the next, forget that idea. Look for this guy right here at 3.99. Now let's see if we can get a market structure shift below here. So I want to see, we've run up a high. I want to see a fair value gap form here right around this 3.99 level, which is 2 standard deviations. And then I want to see a reverse change in direction around the 10 o'clock, and then see if we can't start getting down for a run back into these levels. I am not discounting this idea back here now that we've run out a new high. Welcome back, Mr. Kata. That was a great show. Vinny, Horseshack, and the gang. Boy, we are old. Yep. What? Remember when John Travolta, his character's like, what? He's like, he was this really dumb guy. What? Arnold Horseshack. You guys probably don't remember Welcome Back, Cotter. So, all right, let's see if we can't get a market structure shift here and catch a nice little reversal. So kind of mark these out on your chart. So that's what we're looking for. What am I on here? 1 minute chart. Inversion. Let's go. Let's go. So we're just looking for a body. So now we've got a body. We want to see this next 22 seconds for a body to close below this level right here. And watch out, because this is our bull trap now, right? Because this, if we're looking at internal range liquidity, this is a small, tiny one. And all I've got is a premium, or we've only got a BISI inside that makes up the whole range inside here. So you have discount and premium portions of that BISI. That's it. So we traded below the discount or the 50%, and we're back up into the premium, and now we're looking for a run lower. So I want to see this mean threshold give way and get a market structure shift. I want to see a nice displacement candle here. Get down into here, and then use this candle to go short. And then we're inside this range. From here to here, you're looking at 50%. So you pay yourself on the way down. And if we break this structure on the downside and come back up and use this BISI or that breaker to go lower, then we're looking for another big run down into a larger range. Then we can get right down into here and here. But we wait. We're patient. You're professionals. It's a business. Be patient. Wait for the deal to come to you. Don't rush your trades. Just wait for your setup to occur. If it doesn't occur, don't take it. Just wait. But this to me is a key level, along with Mr. Breaker here, or Mrs. Breaker. Rejection block. Now, if we close above this, come back and find support, look right there. Find support here. You want to see that continuation to 399. And if it keeps pushing higher, then unfortunately it took off on me and I never got a chance to get in on that. Got a one direction today. So it's above. We have a body trades above this level. I want to see this candle find some support now and leave this portion open. If we do eat through the mean threshold, look for these three candles and their mean threshold is back into this level here. Tap it and go higher. There's your 399 level. And now we're open up. This is 10 o'clock. 10:01. So 10:02 tends to be a turn point. 00 and 2. So now we're waiting. Waiting. So you've got this level to go higher. And if we close below that level and take out that level, they're all kind of overlapping. And I want to see a market structure shift. I wouldn't even be messing around with trying to fumble around in here to catch a short. Wait till you get a market structure shift before deciding. Otherwise, there, and there, those three levels, I lose more sensitivity the deeper we get into this BISI here. See that little tip and go. Remember our graded response? That's an A+ right there. But it's really late in that run and it's 10 o'clock. So I'm not super keen on chasing that. But that would be an ideal tap and run. So right now, if it takes that high, I'd move to break even and pay yourself at that high and move yourself to break even plus the cost of your trade. So it's a zero stress, zero risk trade. Rejection block. So if you took your entry and your pay for your trade, so pay yourself a rejection block, you'd still be in that trade at risk free, and you would have paid yourself a tiny little piece right there. Again, that's just trying to deal, if you're trying to do this as precisely as possible, and you want to try and get into a risk-free trade real quick and pay yourself, nibble a little piece off, that's what you do there. At the 5-minute chart, he says, Yeah, everything's bullish now. So I'd like to see this close above here and use this candle, its high or its open, to continue pushing higher, which puts us, now you translate that over onto our 1 minute chart, and the high is the top of this fair value gap, and the open is the mean threshold that we've been looking for. Those two levels are that level there and there on our 5 minute chart. So you want to see this go higher, those two levels right there. I don't want to see the mean threshold of this candle give way, which is all the way back down into here, which would be right. You see there's a tiny little imbalance right there. If I spread this open, you'll see it sitting right there. That's the mean threshold of that 5 minute chart right there, or 5 minute order block. So we'll see if this level and these two levels right here hold price and start pushing higher, or if we start getting a market structure shift. If we can get below that candle, use that for support to start pushing lower. I always think about 10 o'clock as a potential turn. If this keeps driving higher, you're looking for 11, 12 o'clock is your turn. I'll watch that trade all the way into 12 o'clock. $448. If I was looking at a 448, what are you looking at there, Hadi? Other than, are you just pulling this as a fib extension? You pull a fib extension from there to there and go bullish. 448 will put you, well, 2.5 standard deviation. So there's 2, which is what we just hit there. The 2.5 would be 427 and 456. 427 and 456. Those would be the next levels I'd be looking for from this fib projection. And if you blow through that, then again, you're looking for 515, and I'd be more apt to look for the 4, which is 515. That could be the big high of the day at 5. So that'd be 515 would be the high objective at or before lunch. Yeah. Oh, you want to see this. You want to see it return back into here. Then go higher. So you want to see this sweep this low and get into here on your 5 minute chart. That would be that would change things up a little bit for me anyway. This 1 minute order block, that high is holding price. We still haven't come back into here, so we want to see this act like a breakaway gap. That level we talked about there, just dipping in that A plus one. You want to see that leave right away here. All this waffling around, not fun for me. I don't like that idea. I want something that had intentions. Like this was, I got intentions. I'm out of here, right? This is just waffling around that level. You want to see that leave from here, not go back and forth in here like this. Starting to hit some resistance now. I want to see that get taken there on a close. Do I do a 20, 40, 60-day look back? Not very often, no. No, I just look for key levels to look back to now. If you're looking at a daily chart, 20, 40, 60-day look back, that could be quite significant if you're in a run. For example, if you do a 20, 40-day look, 60-day look back, if you got into a reversal here, and then you look for 20-day discount array I was looking for, or 40, 60-day look back for a discount array, using the same principles we use on a 1-minute chart, on a daily chart, and you're looking for that 20, 40, 60-day look back, and I see something back there in 20, 40, or 60 days, that would be the objective I'd be aiming for if I'm looking for if I was trading on a daily chart, if that makes sense. So there's that level we talked about, which is that open right there. That's the level we're looking for. Now you want to see this start marching higher, not use this level here as the opportunity to roll over and come lower. So watch that guy right there. If it rolls over here and comes back down, look for that little tiny imbalance right there, and this 1-minute fair value gap to give way, and then a market structure break, and then you're looking for 50% of this range, 25, 50, 75, and if you lose that, then we're looking for the market maker sell profile beginning, right? Yes, you got equal highs up there. It's hit right at 2 standard deviations. So just watch and see where it goes. If this is the little tippy tappy and go, and you want to buy in on that, your stop loss is sitting here. As soon as it breaks above these highs, pay yourself at rejection block, move your stop loss to break even, go risk free. But pay yourself in that little portion, because if that just swings above there and rolls over and does not take out this candle on the close, then you're in a bull trap. It'll roll over and come back down on you. So there's the rejection block. Pay yourself there, risk free. And again, like you did here, you get yourself to risk free, pay yourself a little portion there, it comes back, takes out your trade, start another trade here, runs up, rejection block, pay yourself, risk free. So you got 2 little risk free trades, just because you don't know if that's going to book it through there or reverse on you and come back down again. Now, mean threshold of the candle right there. So it's holding on it. Now you want to see that give way and that high get taken with a bold candle here. And I want to see a fair value gap form above this consolidation. You like the 5-minute Hadid? Good, that's fine. I got no problem with that. My eyes on the 5-minute. Welcome back, Jean. Thank you very much, Jean. Thank you. It's good to be back. Gotcha. Yes, that makes sense. Dayton. You're welcome. And 5-minute fair value gap on ES hold so far. On ES, let's look at ES here. Oh, these are all June. Where's ES? I'm getting rid of that one, and I'm going to go to this one. This is all September's. 5-minute. Yeah, so far you've dipped into it. Yep, I agree. Watch your mean threshold here, though. If that holds, you got that level and this level right here are your little battling grounds for your for your level up. Because if that holds right now and rolls over on you, mean threshold holds the run. So go down to a 1 minute. There's your reverse. There's a market structure shift already. You're back up in here. That looks like it's going lower to me. For me, you'd have to get above this level. That looks like it's coming lower. So you'd have to get that candle to the left right here. You'd have to trade above that to go higher for me to be bullish on ES. Right now, it's just tipping its hat to me that it wants to go shorter. There's the premium level right there, discount, premium. That's come back up into that level. So if you lose this level right here on a 63.63 on a close, come back in there, find support at that, then we're coming back into a deeper part of this range. And we haven't, I don't think you've quite hit 50% of that yet, have you? Maybe you have. Yeah, you're over 50 already. So that could have been in your little dip down, take out that low and start marching higher. So if you can argue both sides, to me, I'm more 51% bearish than I am bullish. So you'd have to take this candle out here for me to be bullish on that again. We do have this run below the low, change in direction, come back inside. We have not quite tapped it yet, but there's a change in direction there. So that supports HIDSIGHT going longer. So, but I'm stuck between this guy and this guy here right now. And you're right in the middle of that range. So I could argue both directions on this. Look at 50%. See? I could argue both sides of that. So I'm not touching it. I'll wait. Just the fact that we've taken out this candle on the downside puts me at 51% down. And this is just a retracement back into this range to go shorter. So short on ES and flat on NQ right now. We've got a wick taking out that high. Now you want to see it kind of give up, start coming through here. That little wick just cleared out the liquidity right there. And we're still at 2. We have no body breaking above our 400 level. So neutral on that. What's YM doing? We're looking for that upside objective. Mean threshold right here. I don't want to see that give way. If that gives way, then all we've done is run up into a premium inside this range right here. Bull trap. You've hit the breaker. That not breaker. I keep calling it a breaker, but there's no reversal or no swing on this side. So this would be like a mitigation block. You've come back to mitigation, and then you're going lower. So if we lose the mean threshold on this candle, which is what we just tapped right there, and we're getting a bit of a reaction off of it, and I know I'm on the hourly. So if we close below that, come back into this candle, I'm looking for this little level right here to give way, and then these obviously the equal lows, and then look for the mean threshold of that candle on the hourly. Yeah, so you got to get above there to go higher. And that is our premium box there. Hey, Mr. Darren, this is Tim. Tim the Tool Man Taylor. How's it going, Tim? Good to see you, buddy. Is this Tim as in Tim from Manitoba? Or am I thinking they're a different Tim? Tim. I reserve the right to say I'm 60 now. I'm allowed brain farts. That's what my birthday card said. You can officially use that as a brain fart, an elder senior moment. So I finally, some people look for their retirement. I look for the 60 to make excuses for my brain forgetting things. The days like today, I prefer to trade on a 3 to 5 minutes. Nothing wrong with that. Nothing wrong with that. Doesn't change your 1 minute chart. It doesn't change. It just, I think what you're doing there, it makes a lot of sense, is when you start getting into this chop and you want to clean it up a little bit, you move to a higher time frame, trying to clean it up so you can see more of a cleaner entry. My guess is that's probably what you're looking for. Am I correct? Yeah, exactly. Because when you do that, and that makes sense to me, like if you're seeing so much chop in here and you're looking for a clean entry, then you give yourself a little more latitude, right? So go to a higher time frame, 5 minute, 3 minute, 5 minute, 10 minute, 15, whatever. See this wick stuff right there? How we've traded below this level and we've traded below that level. And now we're right back up into the rejection block again. So now you're looking for it. Where does this close? Does it close above that candle? You got 15 seconds to watch it now and see what it does. Don't chase it, just watch it. Wait and see. Because this one you can say, I knew it was going to go bullish. You could argue both directions on that on a 1 minute. And see how we're above that mean threshold now on a close? Now I'm switching and I'm back here. Now I'm switching to a bullish. We're above that level and we're above the mean threshold of here. So I'd like to see that just come back and give that a little tap. Or the mean threshold, give that mean threshold a little kiss. Come back. Pay yourself at 8. Good one. So look at this. See how this leg here, we come back, take out that low. And now if we clean this high and look at this breaker here, we come back to this breaker, give it a tap. Now you've got a body above that level. I don't even want to see this tap now. I want to see that level hold price. Though I guess you could still come back to the mean threshold and give it a tap. But that right there, go long that off of there. And then you get a 10 o'clock continuation into lunch hour, which is that whole upside objectives we were looking at earlier. Oh, this is S&P already. Now just start marching higher. That's a nice little tap. Come back, give it a little tippy tappy. Right there. Kiss. Don't lose the mean threshold now. Long. So that breaker, you want to see that breaker hold price now and keep marching higher. And this one here, cam model, displace, cam model 1 entry right there. You don't want to see the mean threshold of that on a close. You don't want to see that. So in other words, this little imbalance you see right here, I don't want to see it's close below that, and I want to see this stay open now. 50% of it right there, the 400 level, and I'll go higher. Leave that open. Darren is back, baby. Yeah, you got it right, Ollie. Mark, thank you very much, sir. Phil's good to be back. So line in the sand is that little guy right there. I don't want to see it close below there because this is an immediate rebalance. You treat that like a fair value gap as well. So mean threshold, I don't want to see that give way. The candle to the left of the fair value gap, which is this one here, mean threshold, you don't want to see this fill in. It starts to lose its luster for me as we start to dig into the consolidation, and 50% of it, which is probably sitting right here. I'm looking at the consolidation there, 50% puts us right on that fair value gap. Okay. And you don't want to see anything close below that. So you want to see a continuation to the upside now. And I've drank so much coffee, I have to go for a pee. Hadi, send this higher, will you? Quit messing around. Let's go. Send this higher. I'll be right back. I want to show you guys this. My cousin got this this AI picture made for Carla and I. Check this out. I don't know if you guys can see this or not. It's like the king and the queen. You see that? It's hilarious. Anyway, that's the they got this. Look at this. King and queen. I love it. They're hilarious. My cousins are great. Anyway, that was one of my presents they got me. All right, I'm going risk-free. I'm risk-free on that trade now. I got long off of here, so I'm risk-free. Watch for a little run above. King Darren the First. Yes, for sure, a royalty. Love it. Nice, nice. Every Englishman is only 10 generations from royalty. Yes, indeed. My last target is 448, and then looking for a reversal. So I don't want to see us get down into 407. You can tap 407 or 408 and then send it higher again. What is this? What time is this? It's the 30 candle, 30:32. Oof. So we could get the crazy Ivan. 31, 32. Just start marching higher. Come on, let's go. So this is 2.5 sitting right here. Lovely. I'm moving myself into some profit now. I don't want to see that level get hit again now. So I want to see this order block hold price being as high as we are, and we're getting close to 8:30, so or 10:30 and 11 o'clock. Between 10:30 and 11 o'clock, we could get a run on this little range that we're creating. So I might keeping my stop loss tight here. I took a little out going down, so I'm caught this really late in the day or the morning to catch this going higher. So we'll see how that goes. On the 5-minute chart, you see how this order block here is holding price right here. Come back, tap the opening again. Keep going higher. Lovely, lovely. We've left lots of liquidity below and the devil's mark. So it's setting up for a short. Did you have some SD projections today? Yeah, these are that's 2.5, and 3, and then 4 is 52, I think it was. Did we not have that on there? 15. So that would be a 4-banger this morning. If you're taking a 4-banger, it would be right to 15. Right there. So those are the next upside levels I'm looking for. Was long off the wick fair value gap. This is the kind of thing you want to see. See how that fair value gap, we have a consolidation, displacement, run back into CAM model 1 entry, or 50% of the wick, or the candle to the left right here. There's your little swing point, which is now in it, or this one here, I guess, because that's the little, take out that candle. Order block, trade back into it, and go higher. So there's like 4 different entries there. You have a cam model entry, you have a 50% of the wick, you have return to a little swing or order block breaker, top the consolidation, and then go higher. Look for this to provide support and keep pushing higher. Now on a 5-minute chart, and you're going, each one of these wicks are always, and this was the only case here when it returned back to that order block. Now each wick behind it, you don't want to see it trade below that wick. If you're super tight, stand by. I was just showing him our royalty pictures, love. Sure. He's like, close the door. I don't want them to see me. I missed the initial long, and I'm done with chasing. So sat patiently today. Good for you, Ollie. Yeah, I'm just making sure that I don't lose any of the profits I made this morning. Keep your even though it looks good, and you think, well, okay, there's a 2.5 objective right there. There's 3, potentially a 4 banger. If you start chasing this just for the sake of trying to get money out of it today, keep your stop loss tight. Don't forget 11 o'clock. There's that potential turn at 11. Or like I say, this could just keep running all the way up into 12 o'clock, and you'll see a 12 o'clock potential turn. And if you don't see a 12, then look for a 2 o'clock turn. So this could just keep running all day, get a big run into 2 o'clock, and then you look for a 2 o'clock turn. And if you see nothing at 2, then you're into 3 and 4 now. If you blow through 4 banger here, shit, that's just going to be a long day. You may see that just take right off. Back to that breaker we were looking at. We've tapped it, went longer. You break this on the downside. There's a small swing here. We close below that, then look for a deeper run back into this guy right here. You want to see this hold price? You want to see a bear trap here if you want price to keep coming higher. You have an imbalance right here. You've traded below it. You've come back to this little swing point right here. You've tapped it. You keep coming lower. You've taken this low now on a little dip below that low. So you're looking at now you start moving into the larger range, and you pull this to your fib from here to here. 50% sitting right here, right in the middle of our consequent encroachment or mean threshold of this breaker. Tap that and see if we hold there and start shooting back up higher. We want to see this fair value gap give way and continue pushing higher. If not, we get a body break below here. Use this candle here for continuation back down into that discount box down here. And that takes me out of the game almost. Oof. I'm close. It's just come down and just almost tapped me out here. That's got to tap me out soon enough. That little pop into there might trigger my... No, it's literally hovering on my stop loss right now for my ES or my NQ. I'm sitting like right there at 411. There, I'm out. Now I'm waiting. See how we traded below that candle right there? Come back up, give it a little tap, come back down. We're looking for this discount array here now. And on NQ, if you go to a 1 minute chart, you'll see this candle right here is our market structure shift, and we're looking for a retap. I want to see that give way, this give way. All this has to kind of give way for me to start thinking bearishness now. And you're getting up into 1030. Remember the crazy Ivan into 1038? You want to see that there and then start going higher to the mean threshold, the 38, and it didn't. It just rolled over and kept coming lower. So this is where crazy Ivan sees you and he comes for you. Let's see if it rolls over here and takes out this low here now. The whole breaker's been used now. If you want to see something with strong strength, you see that breaker get used, tap, and then start marching higher. Start just take off. You don't want to see reversals, change in direction, structure shift here, small little one, then here, come back up. Now we've got a full body traded below it, trade back into it, roll over now, and head for here. If we close above that, look for a body to go above it, come back, tap it here, inside that fair value gap, that breaker gets reclaimed from above and then start going higher. But otherwise now I just want to see that tap it and then reach for this discount box here. That's what I'm looking for. With all-time highs, I usually trade off of fair value gap, targeting the last high for price. Yep, it's a premium area, but likely for price to return and not have to guess a higher unknown target. Yes, yes, yes. I like the way you're thinking, Russell. I like the way you're thinking, man. Nothing wrong with that. Looks like we're earning experience points now. Yep. If I see BPR on the 5-minute chart, I'll go short. 11 a.m. is coming. Look for the 5-minute chart. Stubborn for value gap. So 2.5. If Derek was here, he loves this 2.5 level for a standard deviations. Those are big targets for him. And you can see why they're key levels. So if we do get a reversal here, right at 2.5. We'll wait and see. What is gold up to? Let's look at gold. Well, let's check out oil first. First presentation, fair value gap on a 5-minute. Right there. Come back up. Support it. Keep coming lower. Discount. In terms of this range, look for this. So watch this level right here. I want you guys to see this because this is something I look for all the time. So as soon as I see a body or an opening trade below this level, then I look for, if I can trade back into that level, look for a short continuation on the downside. So you trade back into it, go lower, reverse. You don't want to see it break that imbalance here and 50% of this candle. Because now that you traded above it, look for 50% for support. It went too low. I wouldn't have been messing with that right now. I'd be sitting on the sidelines waiting for this high to get taken and this fair value gap in here to get closed above again. But that's classic. If you break it with a downside, come back into it, look for continuation. DAX. See how DAX has come down into that discount box here? You've tapped it. Now you're stuck in that small range there. So again, like we said earlier, you can't really do much with it on a 4-hour level. You have to get down to those lower time frames to hunt for something decent. Ooh, that's really... Carlos Dab was in on gold at $1,800. I'm like, keep it. Look at it now, $3,400. That was just over a year or something ago. Change in direction. Look at that. Just traded above that fair value gap. Swept these lows. Fair value gap forms. I want you guys to see this because this is the same thing we show you every day. This is how Hadi got really good at what he's doing. You see this here? Swept the low. Watch for the fair value gap. Traded above it. Come back, find support at it. Start pushing higher. Takes out the premium array. Right? We close above the premium rate. You don't get a chance to swing back into it. So look for the highs. The body trades above the high. You come back to the high, you tap it, and you go higher. It's a beautiful thing once you see it, you guys. Reversal. Trades back above that. So this reverse of change in direction right here, that's where you should get out, which is where I got out if I was wrong. And now I'm already in bed, so this would have been great to catch this one for a long. As soon as we trade back to that old high again, which is right in here. Reverse. Old high. Old high. Next one, next one, next one. And away you go. And look at that sucker now. That would be a delicious little run. Bitcoin. Premium array. Look for that premium box there now. We're up in there. We look for body trades above. Comes back into it. We talked about this morning. And then away you go. Up into the premium box here now. So that was your Bitcoin trade this morning. Disney, back to this order block. You want to see it get back above here now, find some support above this whole range here. Take out that high and look for higher prices. Just traded below this premium. Back in there, go lower. I don't want to see that level there at 1175 giveaway. British pound, we wanted it to go higher. Ba-boom. There you go. Higher it is. Came back to our order block here. We traded above it. We wanted to see it stay open. Look at that. 50%. Right on the money. And higher she went. That was a good call this morning. Hope you guys got that one. Those of you who are into Forex trading, I hope you nailed it. And there's that 50% of that range. Come back into, or it's not range, 50% of the order block. And then go higher. We look for, we wanted to see it get up into this level right here. You'd have to double check what I was looking for this morning between 116.70 and 116.80. And we're through that. Delish, you guys. I hope you like it. I hope you like it. Yes. Do you feel it? Do you feel it? Yes, I do. Do. Okay. Here comes the short. Here comes the short. So keep an eye on this, guys. So you see this market structure shift. Body trades below it. You come back into it right here. Continuation. Now you want to see this get taken. And this, remember that first one I talked about was this imbalance back here? This immediate rebalance. I want to see it close below that. And then because this one is literally overlapping, let's get some market structure shift here and keep coming lower. Get below here. Let's get some market structure shift here. Another big market structure shift. Wait for body to get below here. You're getting yourself into a bear trap otherwise. That imbalance, that immediate rebalance, you want to see it get through here. Otherwise you could get caught in a bear trap and end up running higher for it on you. So just wait for your setup. 5 minute, wait for that candle to get taken on the downside. The fact that we've lost the mean threshold already and we've traded back into it, I like that for continuation down. So let's just see if this continues pushing lower now. 404. I don't want to see 404 get taken. Immediate rebalance. Come back up into this. You still just got to get below this level here for me. You still get caught in a bull trap, or a bear trap, I should say. I want to see this whole thing here give way. Coming up for 11 o'clock now. Looking for a big red candle. Indeed, indeed, indeed. There's a little imbalance right down here on a 5-minute chart. Let's go. Come on, move this thing, Hadi. Let's go. Yes, sir. He says, let's make it happen. See how we're tapping this imbalance right here, this immediate rebalance? I want to see us cut through here. Get a nice little bold candle through here. Come back, find some support at this level or this level, depending on how big this candle gets. Just rip it. Rip it through. Let's go. Waiting, waiting, waiting. Just looking for a structure. I want to see a structure shift and then a fair value gap. Use the fair value gap to market going lower, or use one of these guys here. That's what I'm looking for. So just kind of sitting on the sidelines and waiting now for something to unfold. Patience, my friends. That's what it's about. Patience, patience, patience. And then I'm hunting for our little, this dude way down here, this regular trading hour gap. See if we can come back and get that. I'm going to mark this one out here too, because I want you guys to see this immediate rebalance right here. And you can use this low and that immediate rebalance right there. See how we're sitting right on the consequent encroachment of that right now? Oops. Make sure it's lined up just right. There we go. I want to see that come on. Push, 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 push down. It's too much chopping around in here for me. And even on a 5-minute chart, it's not, it's just come back into this immediate rebalance right here. So I want to see it roll over here, and it's really not getting any momentum right now. So you got to wait for a displacement candle. What do we got going on here? Attaboy, Ollie. We just want to see something nice displacement. And you can tell when you see that displacement candle, just do a personal check on your emotions, on your feeling, whether you're one of those cat-like people that you see something twitch and you want to pounce on it. If you feel the need to chase that instead of wait for, hey, that's our first indication that we are looking for a setup, right? If you see it and you want to chase after it, then you got those cat-like reflexes, and you're just chasing things, whatever reaction you see in the market, and you don't want to do that. You just want to wait for something clean to set itself up, and if it continues to wobble back and forth like this, you just wait till tomorrow, or wait till the afternoon, after lunch hour. But demand from the market your setup. Don't say, oh, it's close enough. See it hit right at the bottom of that imbalance? Look at that wick. Sliced right into that imbalance. Just tap the bottom of it and look at the reaction you're getting now. It's now swept all of this liquidity here. If this was a daily chart, that'd be the run on liquidity right there, right into that immediate rebalance right here. And now you're looking for, are we going to go higher here? Again, bear trap. Watch out for the bear trap. If you're trying to chase this and you say it's going to go lower, and let's say it does go lower, all you're going to do is reinforce that you can withstand a bear trap, that you can pull your foot out of it and know that you made it and you were right. And you're just going to feed an ego that's hasn't been given proper confirmation. So just wait. Oh, people, do you see what you see? How your reflections of my reality. That makes you larger than life. I don't know why I'm singing those, guys. My brain's just clicking away here. Again, we now have a body below this breaker. I like that. Now let's come back and give it a little kiss. I don't want to see a body break below here. See how we're stopped right on it? Let's get a body below that. I think that is actually below that level. Once that candle's open. 81.25. Once this candle's close? 83. So lower. Tap it. Come on. Come down. You can run all the way back up into these candles lows. And then I want to see that roll over and come lower. Right there. No body here yet. Again, you want to see a decent break in market structure, right? So that's the tap there. Let's see if this rolls over and keeps coming. So far, so good. 50% of that wick. Keep coming. Don't go up anymore. I suppose you can come up into the body here or the mean threshold of that candle, which is the top of this immediate rebalance. I'll let you have that. How's that? I don't want to lose that mean threshold of this. If you do, you want to see a body get above here, a displacement above it. Come back, use this candle as support and break structure. Take these two candles next. Get above them, use them for support, and start pushing through. Because all you've got left above you is maybe this little piece here. Immediate rebalance. That piece there. Come on, let's go. Get down. All right. That's it right there. See it? Tippy tappy. And it's right on a 10. Give me a 9-10 turn. Let's go. No, you don't want to break a high on that because then you're looking at 12. So that looks like it would run. Look at this candle here. That's got to stop right there and start coming back down. That's 11, 12 here, or 11 and then 12 starts to come back down. If not, look for that high for the next 12 candle. The 11 need threshold. Yeah, it's going higher. Let's wait for 12 now. There's 12. Told you. 10 doesn't give you your turn, look for 12. If 12 doesn't give you your turn, look for 14. So now you've swept the high here, this little candle. Now I want to see if this candle, we close above this candle and see if we use this candle to take out that high right there. So 12, 13, 14. unless 12 pulls all the way back and through this mean threshold. Eight seconds. You're looking for a close here. Look at that. Right, just closed above it. 13, give it a tap and go higher. All the way to here and mean threshold. You want to see a portion of this stay open. But we can come all the way back down to that Wicks low. It loses its luster for me now that if we start going through the mean threshold, see we're closing it. It's 12 is a turn. 13. This could be a 14. This could be a run down here. If we can get through that candle's mean threshold and a close on 13, and through this little imbalance right here, this little fair value gap on a close, come back into there on a 14 and start pushing down lower. Otherwise, tap, march higher, 14, look for a run on above the high here. So we're just kind of looking at the same thing we look at on a regular larger range stuff, and you're just looking at these main important points: the high, the oak close, mean threshold. Does it provide support? Once we've traded above it on a close, come back, find support. You want to see this keep pushing higher now. 14 should make a new high. We have a change in direction, and we have a new little shift here. I see this as a little shift. A market structure shift would be above it, or most a swing point, obviously. But to me, that's an important candle right there. Curry Fishball, I am back, my friend, and I will get you your little discussion we talked about. I'll work on that today. It's 14. 16, 17, 18. You want to see the squabblers going off here now. Looking for 16, 17, 18 to make a high here. If you lose again, that mean threshold you've been traded back to once, I don't want to see it get traded back into a second time. Then I start losing my love for this. Starts getting high resistance for me. If we've done it once, I don't want to keep coming back and revisiting this mean threshold here. So I'll let you go once here, then here, which is what you did there. And then the last one is the high right there. See the fact that it's even starting to come into that, don't like it. We're into Chopville. Just watch that mean threshold there. Thanks, Hans. Thank you, sir. If you like what we're doing, hit the like button. If you're new to our channel, subscribe. We're here every day now, or at least another 10 weeks anyway. We're here for 10 weeks. So if you're watching this stuff and you say, this is what I want to see, otherwise it's not acting the way I want it to act. See, that candle was important for me because we traded above it. Now I want to see it hold price and start going higher. And the moment it doesn't, it keeps coming back into it, you're getting into that high resistance stuff, right? Where it's just kind of not acting like it was doing down in here. Like you want to see it come back, give it a tap and leave like that. That's intention, man. Not this stuff. See how it's starting to get into this high resistance crap. So we're digging into the mean threshold already again for the 1, 2, 3 times here. So look for this to fail, and then we start digging into the wick, filling that fair value gap, get on the other side of that. Now we're looking for this fair value gap to provide support and come lower. Look for the rejection block, and again, we're back into this dude here. Right? Bear trap. No break in structure, just a bear trap. Now it started to look like it wanted to go higher. Now we're back into the mean threshold of this last down close candle. Fair value gap, fair value gap. Turns into an inversion. Fill, premium, discount. Look where we are inside. This is how you look at the, mark the little tiny ranges that you're in. Right? And look at these little tiny ranges that you're in. 50%, just below 50% into this level here. That's your BISI. Imbalance, traded below it, come back up. Fair value gap, imbalance, mark them together. You traded through them, you've come back into them. You want to see it roll over here now. That mean threshold gave way. Trade back into the mean threshold and go lower. Okay, so that's the kind of stuff you want to keep looking for, specifically on order blocks. Fair value gaps, when they become inversions, they now become a level of higher stability for me. And as soon as a fair value gap gets broken and then used as an inversion, it now goes one step stronger for me to keep coming lower. And if that's in line with an order block I wanted to see hold price that didn't, and its mean threshold gave way and then it came back, used it to go lower, that wick is that whole candle's wick is the last line in the sand, and it's really, you're already through. Reverse, high's been taken. And now we're using this candle here, which is a breaker, last up close candle before taking this little low here and that low there. Use it as support now to come lower. Take out rejection block. And look for lower prices. That's how you stay on the horse, man. Stay on the horse. So where does it change for you? So now the rejection block's been hit. That's a 18-19 candle. 12 makes the turn. There's 16, 17, 18. Remember the squabblers? Then 20, 21. So this is 20, 21. And then you can come back into that range again to 27, 28. Then 30, 32. I want to see that one pop up here, make a short little swing point, and then come back down again here and here. So watch, if you're using TIBS as a tool, look for this level right here and see if TIBS lines you up inside that little box. Right there. See that? So now you don't want to see that get taken to the upside on a close. So TIBS, you want to see it stop right here, roll over and come back down. $11 seconds. And look right over here. Trying to cut back, and I look for all the SIBIs that I can find that's just above me. Now that I've traded below them, I want to see if the SIBI here is what I'm outlining. From there to there as an upside that you don't want to see it trade through. If it trades through that, you look for this candle here, continue to push higher. So there's 22. So you're looking for this. I would look to see this go higher now that we've traded just above there, which is this one here. Oh, we're like right there. That one opened just above it. See if this holds here now. Watch where that closes in the next 12 seconds. There's a little tiny fair value gap right here. Traded above it, come back inside it right there. Look at it when I open it up wide here. See it right there? Traded above it, come back inside it, keep pushing higher. Liquid above that level. Now you're back below that level. Chops fill. This level may get hit one more time right here. And I'm doing this just because it's kind of boring and it's not giving us any action. So I'm just trying to stay on the horse here right now. That's all. So 26, remember for 27 now. 27, 28. We traded above. Came back down into a discount portion. And it's got to stay push through here now and take out this high because I don't see anything else up here other than that little dude that we called over. Where is it? Over here. So look for 395. We can get up on top of 395 and use it as support. There's another premium array inside that range. Come back, give it a little kiss right here. Start pushing higher. Keep coming. Darren, thank you. Need to go. See you tomorrow. Have a great day. See you all tomorrow. Okay, Hadi, take care, buddy. I got a food shop for the wife. Darren, please update your TG link. It's expired and can't join. Oh, man, look, I will show you. I will show you. Let me go up here. Let me see. Let me see. Let me see. More. I'm just going to go back to my channel here. Oops. I don't want to manage videos. Let's go back. More links. Let me just click here. Telegram. Let's go to Telegram here. I'm just going to fix this for you right now, Russell. I want to see. I'm going to put this in here so you can see. I'm going to go here. Oops. Add folder, boost manage group, topics, appearance, reaction, members, choose recent reactions. I'm trying to find out where the heck I put the link now. Add members, there you go. So invite link, copy link. I'm going to copy that link. I'm going to close it. That's as fresh as I can make it, man. Close this, move that up to here. I'm going to go into my channel. And I'm going to add Profile. Name, handles, pronouns, description, add language. Here we go. There's the links. And we're going to change links. Telegram, Breakfast Club. Paste. It's the same thing, man. I just added it. There you go. Let's update that. New channel. Okay, Russell, I just added it, man. I just added it and it just gave the same link. I'm trying to join your other on my other phone. Darren, what is your objective for gold higher time frame? Yeah, I just added it. It's the same link. I just went fresh into that Telegram channel and the link is exactly the same. And I just updated it on the thing there. So if you can't use it on your phone, I don't know why they keep telling you it's expired. It still works. It's the same one I've used since the beginning. So, and I don't see any expiry dates on there. Anyway, let me get back to this gold here for Ali. What would be my upside gold objective, you say? Well, you could do... That's a 4-banger there. I think the next one would be, if you're just looking at it from... Let's go this way. There's 5, 5.5. 6 will be in here at around 342 or 34.22, and then 34.28. I'm guessing about here is 34.22. That would be an upside. And then I would say put the next one there. That's what I'd be looking for, Ali, if I was looking for, if you're staying in this thing, or if you're in it still, look for this level right here. And I'm on the 15-minute chart here. See how we have that fair value gap? Then we have a run back to it. That's your A+ setup. When you just come back and tap it and go. Now you want to see this candle hold price. I don't want to see its mean threshold give way. So just give it a little kiss right here at 414 and 413.9 and start pushing higher. If you see, so like typically, if you're in a 15-minute chart and you're catching this for long, you can use the take profit model for, can't remember what the, okay, 1 was, 2 is, so 3 and 4. So take profit 3 would be wait for this reversal or this fair value gap to become an inversion, come back into it, close your trade. Or the take profit model 4 would be whatever your standard deviation is. Every time you hit a 0.5 of a deviation, put your stop loss to the previous 0.5. So in other words, if this was a 5 and that's a 5.5, you move your stop loss to 5, pay yourself at 5.5. Get to 6, pay yourself at 6, move to 5.5. 6.5, move to 6, so on and so forth until you get up, or you just wait for the next fair value gap to get traded through and close your trade. So that'll be your setting your premium above you, and look for your discount back down here. So premium, discount, look for market structure shift, and then continue running all the way back into this range here again. So that's how I would do it. So now that you've just tapped this high here, you want to see that keep pushing higher. Next objective, in 0.5 increments now. And then just wait and look for, if you're staying on a 15-minute chart, wait for the first reversal. In other words, change in direction. This would be a market structure shift. You can get down below this swing point here now. So that has to hold price for me to go higher. No more than the mean threshold should that go below. If that helps you, Ali. Yeah, I don't get why it doesn't work from YouTube link. Thank you. Got you. You're welcome. What we're going to try here, I'm going to try and access this so you can see it, Russell. Let's do this. Let's do this. So just so you can see it, that's our channel, and we're live here right now. So I'm going to go into this link right here, scroll down, and I'm just going to hit this, and we'll see if it pops up. Oh, sorry, this Telegram link right here. Click it, and there you go. And you join the group. So the link works. I don't know what's wrong with your phone, but it's definitely not my link that's doing it to you. Okay? My link's working. Sorry, buddy. Anybody else want me to look at anything specifically? Because we're coming up for lunch hour now. So this was our 22. We're looking for 27. We talked about 27 being a turn point. 27, then 30, 30, swing point, 32. No swing point here. So now I'm looking for 38. There's 35. And what are you looking for 38? So looking for this high to get taken. And what are you looking for over on this side over here? I'm looking for this immediate rebalance. So I'm looking for this right here. I'm looking for price to get up into here. And we'll see how it acts inside that. Thank you. Got you. By the way, Darren, is there a materials lift for understanding ICT terms to quick shot? Yes. I think on our channel there, if you go to our Telegram channel, I think they've got some guys there who've got, I'll go to the coach's corner or the off script tab, and you can see, I think in there they've got a list of ICT terms that you can use that he's approved of, and it literally gives you everything he uses as an abbreviation. So look at that. See how we hit that little spot there? Bang. Tippy tappy. Right on precision. So now I want to see it eat through that and start pushing higher. Because if it just taps it now and reverses and comes back down and takes out this low, then I'm back to looking at this guy down here. Now that we've traded above a high, I want to see a body get above here now and use this as leverage to go higher. By the way, there is a material. Does that help you out, Ali? Yeah, just go on our Telegram channel there, and I'm sure one of our friendly people in our group will give you a hand with all his JD joined the group. Welcome, JD. Manson. JD Manson. If you can't find it, let me know. I will do a little hunt for you. There's 38. So Crazy Ivan, either he's just coming back to tap this level and continue coming lower. So this is the Crazy Ivan moment here, where he comes looking for you. And if it doesn't see you, he rolls over and continues coming in the direction he wants to go. If he sees you and comes through you, look for higher prices. And I call it a Crazy Ivan because it's just referencing the hunt for Red October. Con sonar, bottom of the hour, Crazy Ivan. And you make like a hole in the water. Looks like we lost some subscribers along the way while I was gone. People thought I was left, and he's turning 60. He's probably not going to make it. Anyway, so let's just find out somebody new. Well, don't forget, you can still subscribe to Hadi's channel. Hadi is giving trades as well. He's showing you his trade setup on his own YouTube channel as well. You can get the link on our Telegram channel. I'm all for you guys getting better. You don't need me your whole life. You don't need me through your trading career. I'm here to help. And if I can help each person move ahead, start your own channel, get yourself thousands of subscribers, do it. Crazy Ivan, he sees you. He's coming for you. That was the 38. It's running through. Oh, no, he doesn't. Because this is traveling in this direction. He does the little look back. He doesn't see you. Keeps going higher. That's 40.42 now. I want to see this hold. 42 make a higher run. If you lose the mean threshold of this, look for 42 to take these lows out. There's 42. So you got 45 now. This is Chopsville. This is crap. This isn't fun. Look at that, right down into that discount. Man, oh man, right into the breaker. Get a bounce off of that fair value gap. Look to the left and look at the candle to the left. Body trades it up on a close. You come back into it right there. Mean threshold, doesn't let go. I show you guys that all the time. That's what you're looking for. Fair value gap. After taking some lows, look for the fair value gap, the SIBI. If the SIBI gets broken, look for a return into the SIBI to take the high. If you don't and it takes the high, then look for a return back into the candle, that candle to the left, and it's high, it's open, and it's mean threshold. That's what you want to see. Your stop loss will sit just below the lowest part of that. All of these, I guess it would just sit right down in here. Comes back, hits that level, and continues to go higher. Run for the highs. Takes the highs, then pay yourself at the high, and look for the next premium array, which is up in here. There's a little tiny imbalance right there. And that fair value gap, larger part of the range, discount array, premium array. And where does it run up to? Look at that, right there. Nails it right on the money on that piece right there. Then you wait for it to trade through it for a range extension. It trades through it, comes back. Look at it right there. Right there, right there. Continuation. Takes the highs, pay yourself. Change in direction. If it trades through that on a close, it does. Trade back into it. Now you want to see that come lower. Change in direction. Market structure shift is down here. That's just the change in direction right there. Change in the state of delivery. Now you want to get that first one taken, take this one out, market structure shift, then you're aiming for that discount box back here. Premium, discount. Do you guys see that? Oh. Alibaba, good morning, sir. How are you? Thank you, thank you. It's good to be back. Look at the first fair value gap at 9 o'clock. That little box area again, see how it's holding price? We got to get above it if you want to go higher. And I've explained this to you guys before. Always look for those imbalances. This is an immediate rebalance. You look for gaps at the discount box. If the discount box gets traded through and you trade back into it, you want to see that hold price and keep coming lower, right? So we never got a chance to trade back into it. After busting through it here, it's coming back into it. It's tapped it twice here now. Now you want to see it's got to get through it, come back, find support at it to push higher into this range for this balance over here. Or it's got to get this immediate rebalance right here. I treat that like a fair value gap. It's overlapping this one. Right now we're back into the mean threshold of this dude. Watch this level right here. I took a big chunk off that move up earlier. A close below 390 may give us a short for lower prices for 390. Yes. 390. I'd like to see us get below here, Ali. I'd feel more comfortable about a short if we can get below this mess here. Right here. We can get below 366. I know it's probably a lot longer, a lot further down than you're looking at, but just so choppy and messy in here. And this range that we're in right now, from the high to the most recent low right here, puts us right at 50%. We're just above 50%. So we've run back up into the premium box, and there's that premium level that we're looking for to see if it provides support, and that'll be just above 50%, right below 62. If we can get above that and find support at that, then this consolidation now, and I want to see a displacement candle one way or another. I want to see a displacement candle come back up, create a fair value gap, and your graded response from there to go higher, or tap this, roll over, take this out with a nice clean downward candle, like really give us some intentions to get through this discount piece here. Clear that out, come back in, find support at the breaker, and keep coming lower. But you got to get out of this, for me, you got to get out of this range here. What else we got? Mm. 'Right back into the lows. %75% optimum trade entry reversal, change in direction. You want to see that close below here, come back into this imbalance right here, and then keep pushing lower for lower prices in oil. Premium, immediate rebalance, traded below it, trade back up into the immediate rebalance, went lower. Premium level, discount level down here. From here all the way down to here is discount in oil. Right there, all the way up to here. Very similar thing on the premium side, from there all the way up to there. First one, immediate rebalance. Second one, so you could take it almost like this. This immediate rebalance here, traded below it, came back up and tapped it 3 times, went lower. Pull your fib tool from here to here, 62% internal range liquidity. Take profit model 1 inside here. Take profit model 2 is box to box. Take profit model 3 is catch a reversal, and you just keep letting it run now until you see the next reversal, then trade, take out, and then take profit model 4 would be a standard deviation. Those are your 4 different take profit models. Oh, they're my first, my specific ones that I use. They're not ICT specific at all. It's just my levels or my different take profit models. See how you're back inside here, alley. See how we go back and forth between premium, discount, and then inside this little range here, premium, discount again. Now we're back up into this premium. So if we get through the premium, look for a run back up into this look for these highs to get taken in the next premium level above you. So you're looking for that kind of thing. So price leg 1, price leg 2. But you got to get through that level. That's why it's kind of just crap today when we looked at that and was like, yeah, it's not really going anywhere. You have to look on the lower time frames for some more fun. So over the last half hour, we have a retap of this level here. And you want to see that go higher. So it tapped, went higher, now it's retraced back, and we're through the midpoint of this candle. So consolidating now. Wait for displacement. Bitcoin hit our premium level nicely. That's what we were looking for. Hit it. Imbalance. Traded through it. Came back up inside it twice. Stop loss is sitting up here. Came back through it. No body broke through it. And we continue going back down into the discount portion. There's our discount box down here. You just came in and tapped it right there. The last 15 minutes. Box to box. Take profit model 2. Lovely, lovely. Keep on going. Bank of Nova Scotia. Get up in here. Gary, if you're watching Bank of Nova Scotia, I want to see it get up in there. I'm going to take some profits up there. Laurentian Bank. I think I've got my next ones up here around 33 or something like that. So I'm looking for profits there. Disney returned back to our consolidation area this morning. Now I want to see this get through this level and go higher. We're stuck inside that consolidation, or sorry, it's stuck inside this SIBI here and this volume imbalance, or price imbalance, I should say. We'll see if it freezes on that. It just pops up above it, gets into 50% of this wick, or at 50% of this SIBI, and then rolls over and comes back down again. That would be the next price leg down for me for the British pound. If we have no real run below the low here, hey? So that little section right there. Yeah, this just looks like a potential retracement back into this level, and then another run back lower. Take out these equal lows. Yeah, I get in the train again and waiting higher on DAX. Okay. Hey D, you probably already did this morning and I wasn't around. Could you take a look at the lean hogs? Sure. Seasonality says it's going down. What's your take? All right, let me have a look here for you, buddy. Little piggies, where are you? Little piggies. Oh, live wheat, soy, coffee. Don't I have little piggies in here? Coffee? Well, let's make one for you, my friend. Let's get wheat. Who cares about wheat? Let's make little pigs. What is little pigs there? What is lean hogs? What's lean hogs? Abs, let me know. I just want to reiterate again, when you see this imbalance right here, it's very important you guys watch this. This is where you're going to see a lot of your, oh, I'll get that. Remind me about cocoa because there's an awesome trade there if you know what you're looking for. If you're following what we show you every morning, Coco's got a stellar trade there. So I want you to look at this here, just kind of get an eye out, a look at that whole level right there, and I'm going to show you why there's a stellar trade there in Coco this morning. Let me just go over here and give my buddy his HEQ. Simple, hedgy. Which one is it there? John Hancock? Well, that's a brother of mine, Mr. Hancock. Which one is it, little abs? HEQ or HE? Lean hogs. There we go. Let's go, little piggies, and August. Oof. See how you're in this range here right now? This is that potential bull trap that you can get caught in. So what I'd be waiting for here, this is daily now, right? So you see how the opportunity was with you on Friday? And I want you to see this because this is important for you guys to look at this. So you see here, oops, right there. And then I want to show you this right here. And then I want you to focus on this right here. Okay. Some key levels. So, like I've told you before, you look for this fair value gap and you wait for price. Now that you've swept these lows and you're inside this larger range here, like you pull your fib tool from here to here and you look for, what the hell, let's do it. Let's do it. From here to here. And you say, where am I in this discount portion of this larger range, right? There's a big breaker right here. It's 1, 2, 3, 4, 5-day breaker, right? Takes out that high. We trade back into that breaker's mean threshold right there. I take 50% of this breaker from here to here, and I go equilibrium. Oh, we didn't quite hit my equilibrium right here. If you use the body to body, we're just shy of 50% of it. Okay. So you look for, and we're right at 79%. See how we have 79% optimum trade entry reversal? So then you look for, when you're setting this up, you look for the reversal. So you say to yourself, where is my reversal? Now that I'm in 75% of this range, so when you're always looking for the range that you've retraced back into, and you see a breaker sitting there going, now what I want to see is if I could see a reversal here on the daily chart, I would love to catch this along, at least back inside this range. So you see their first reversal right here. You go, ooh, that's sweet. If I could just close above here. Now, when you saw this during the day, you were going, oh, that looks awesome. Then all of a sudden it pulled back and then closed inside the gap. You go, nope, this could be just another price leg lower, and we have a discount array down here I like still. So until proven otherwise, I'm aiming for that. Okay. So then all of a sudden you see it go, opens up here, and you go, sweet. We've now gapped up above this level. If we could trade back into this level, I could catch that for a long inside this range. And I'm looking for 50% of this range. I'm looking for right here. That's where I'd be looking for. It does not give you a wick. If you would have caught that wick and then ran to there, you could have paid yourself there, 62, so on and so on. Trading internal range liquidity. So it took off and you go, great. Now look, it stopped. If I just want to see it close above this level right now, and look at that. It went above and stopped. Just to piss us off, it stopped. And then it did the same thing we were looking for right here, right there. It opened, it gapped up, and it go, great. Now it's trading back into that range right there. So you enter in there. You're paying a premium for it because you're above 50% of the range. So 1, 2 would be your consequent encroachment, and 3 would be the bottom of that, right? So you got your long there, and then it stops, gaps up again, pay yourself. Move to break even, pay yourself, and wait for this mean threshold to get taken, pay yourself at the mean threshold. Now it opened right on the mean threshold of that breaker. Now what you want to see is this close up above this level right here on a close, then come back and use this candle's high, its open, and mean threshold is the line in the sand to go higher. Remember, I always tell you, as soon as you see the fair value gap, look to the left and find the first order block, positive upside order block. If you close above that, look for that order block's high, open, or mean threshold to continue pushing prices for your next range. So you take your next range and you go, where is that? I take my fib tool, I go from high to low, and as you do, take profit model 1, take profit model 1. As soon as it breaks that high there, you're at 50%. Comes back, find support at it, pay yourself at 62, move to 50. Pay yourself at 70, move to 50, and there's your next upside objective right there. From that candle's open to that candle there. Bingo. That's daily. That's a daily chart. So I don't know if you want me to show you on a daily chart there, Abs, but that's what you get. So that candle there is the pivot to aim for that section right there. And you pay yourself on the way up. Okay. So right there would have been a nice little entry for a long this morning. If it would have come back in there, you would have gone, oh, I want to go long on piggies and I want to try and get above that level. Get yourself to break even because you're very high in the premium range. If that reverses on you now, that's a bull trap. You must be above this level in order to qualify to go higher. If you don't, that's a bull trap. You'll roll over and come back and take this section out, trade back into it, take the lows, and head for that little guy down there they were looking at before. Does that make sense, Abs? Hopefully you see that. And cocoa. So let's go back over to this cocoa idea right here. Same kind of thing we're talking about over here, you see right here. So let's just review what I told you right there. We're looking for in cocoa. So we have a swing, right? We have this right here from here to here. And we say there, I'm looking for a body to trade above that level right there. Body trades above it. And you go, sweet, if I can come back into there, I'm catching that for a long. There's your long. You look for the first order block to the left of it, which is a positive upside order block, which is this guy right here. If you break the high, now you don't take my word for it, just actually check this out. So it traded not only through this high on that candle, it traded through that guy as well. So you take that and that, trades back into it. Good. Stop loss will sit just below that level. And you look for the next level to get taken out, which is right here. Look for the next order block to the left, fair value gap, order block to the left, right there. Body trades above it. Look at this. Ooh, come back, give it a little kiss, and then we head higher. Premium array, you hit it right there. There's your premium box to box trading from here to there. That's my box to box trade setup. Make sense? Do you guys see that? So that's my ThetaWave box-to-box trade setup. Hadi loves a box-to-box trade setup. You'll see it on his channel as well. And that's what I came up with using like-to-like array. Michael likes to use the BISI on this side. I use the SIBI. Not that mine's better. They both work, but I focus more on the SIBI. Michael focuses more on the BISI. Though he has talked about this before, he focuses here, I focus on here. So hopefully that you guys get that. If you have any questions, ask. I'm more than happy to help out any way I can. Randy, welcome to the channel. Welcome, Randy. I see you've joined our Telegram channel there. Welcome, welcome. So let me go back over here. Where are we at here? Let's go over here and see what kind of shenanigans we're up to. So now you see how we've traded through this level. Now look at this imbalance. See this imbalance right here? Draw from here to here. And you say, if we get a body that trades below this level, I want to see this level provide support now. So watch. I'm going to close this one out here. I will get to that one later. That's an immediate rebalance, right? And we took that originally all the way up to here. I'm just going to take the rebalance here. Wait for a body to trade below it. Never did. Never did. We kept going higher to the premium box that we pointed out over here. That's the imbalance I looked at here. Imbalance to imbalance. Discount, premium. Ran all the way up here. Came all the way back down. And now watch it. Watch, 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 watch. Trade below it. You come back inside it. You can either tap the bottom of it. It's super strong if we can just tap the bottom of this and leave. That's sweet. It taps it into it. It's acceptable. Stop loss sits just above it. We run down, take out the low, pay yourself, move to break even. Now you've got this little imbalance right here. We've traded through it on a close right there. You come back in, you give it a little kiss. Same thing as this over here, right there. And now we range extension. You just got range extension right there. And now we're looking for these lows to get taken. So now I'm looking at, I like to see this. Now, to me, it's setting up for a continuation on the downside. If you have ES and NQ up and they have a divergence, but NQ presents a model, which index would you trade? Whatever one's presenting my model. I'm not a big fan. I'm not a big, huge user of SMT divergence. It is just a tool to give you an indication of which one is the most likely, the best. If you see a trade set up on both of them, take the SMT divergence that supports your trade setup. If not, if you see the one that still has an SMT divergence, what I show you is the fail-safe, right? You'll know, because remember I was calling earlier today, I was calling for a 4-hour chart. Remember this one? When I said, oh, it's going down here, right? Remember I was calling for it to come back down into here. I was looking for this, right? As soon as it gave me this, and you start running above and you come back into that level and go higher, that's it. I've got my reversal. There's the reversal one right there. I want to see that keep going higher now. So that's how it can change up on you quite significantly. And whatever downside objective I had, oh, sorry, that wasn't my downside. This was my downside objective, was it not? You'll have to go back through the video. I don't want to lie to you guys. I don't want you to feel like I'm just form-fitting it. Go back to the beginning of the day. I had a 4-hour downside objective that was, see you later, babe. See you at 1. I had a downside objective that was lower than what we got. And then I have to be prepared that when that changes direction on me, like this guy here, when that changes direction on me, I've got to be prepared to see that I'm in the wrong. Here's the reversal right there. And it goes higher. Comes into here. One more time. Taps it. Stop loss is sitting down here. Aim for the first objective. You hit it. And now we're hit the first, second, third, fourth. You got your standard deviation objectives from that point on. So you've got to be prepared to have a fail-safe to say it changes direction on me when this happens. When we break this spot, I'm on the wrong side of this. I have to forego my ego. I have to forego my greed. I have to forego my expectations. And it's going, and just say, put that off. We're going in a different direction. And you've got to be prepared to get back in sync with the market. If you marry it, you just got hammered because you married a trade. You were sure it was going to go there. No, it gave you the indication it was changing direction on you right here. So you always have to be prepared. That's what a fail-safe is. If you don't know what a fail-safe is, I've got videos out there on the failsafe and how to recognize when you practice this on a day-to-day basis. You come in here and you're here with us in the charts. We're showing you exactly where to stay on the horse. And I keep telling you right here, it's got to get above here if you wanted this to go higher. If it doesn't and supports price, then my next downside objective was this guy here. It was a little bigger. It was that thing. If we break that, then we've got a break in the market structure. I want to see that hold price and keep coming lower. That's exactly what it's doing. So if you want it to go higher, that's what has to happen. The fail safe is, if I'm short here, the fail safe is if it breaks that, I'm on the wrong side of it. It's going up higher. And now you may say, yeah, that's pretty easy to describe. But if you've been here every morning with me and you're on a 1 minute chart and a 5 minute and 15-minute chart, you'll see those levels. I've been calling them out with some pretty freaking laser precision. That gives me that confirmation that I'm going in the one direction or another. Okay. So hopefully you understand what it was I was trying to get across to you there. Fail safes are critical. They should be a critical part of, and they're not an ICT term. It's just something I came up with, but it is the fail safe. If you understand ICT concepts, the fail safe is just my way of saying, if you don't recognize having, here's an easy way to remember it. A fail safe is when there's a change in the state of delivery. When you recognize there's a change in the state of delivery, your fail safe should be there. Your stop loss should sit above market structure shift. Because if you don't recognize the change in the state of delivery and then the market structure shifts and then we start going above you, it's going to take your stop loss anyway, because that's where your stop loss should be sitting, right? So change in the state of delivery, recognizing where that change in the state of delivery is optimum fail safe. Because then you know, before my stop loss gets hit, there's a change in the state of delivery. So the next objective it's going to aim for is market structure shift. Or at least retrace into a 50 to 62% or optimum trade entry reversal inside the range that you're in, which is inside this range. There's your premium right there. Order block. Body breaks above that, look for a run back into here. If we get through that level and we start digging into this level again, more chop around lunchtime. We've got equal highs above us. There's not much up in here that I can see other than 408. But watch right here. That's the small range you're in right now. If you just trade back up into that level right there, that's ideally where I want to see that stop. Trade below it, pop into it, keep coming lower, range extension. Trades down lower, come back up. There's a little tiny imbalance right there. Watch when I stretch it out, you'll see it. And I'll draw it out so you got an idea. You got to keep an eye on these little tiny imbalances as well. Look at that. Bing. Nails it. And now we continue going lower. Look how tiny that is. Now, you wouldn't see that had you not stretched out your charts and had a good look. They're critical levels, man. Critical levels. You're welcome, JPlay. JP. We're going to ease into this. My first day back, get a bit of profit, move to the sidelines. I like this. It's kind of changing up. It's really kind of slow and choppy, but we're giving you some super precision here. I like this. Now, look over here. Where do you see price being supported? Where do you see that imbalance is like super precise, right? That's a 1 minute chart. You see right here, from there to there, there's a little tiny one right there. Right there. We got one right here. Watch price trade below it and come back into it right there. You see that? Look where my crosshairs end up here. From there to there. See that? The moment you trade below it, watch and say, I want to see this level provide some support. And this now becomes a breaker that takes out these old highs. I want to see this breaker hold, and I want to see that imbalance hold. Trades through it, breaker holds, comes back. Look at that, bang, bang, right off of that imbalance right there. Now this next one, you want to see price come back into here, hit that, roll over and come back down, or this little guy here, super strong if it holds here and just keeps coming lower now. If it trades through it, I want to see that level. I do not want to see that get traded through. If we get traded through, then I look to fair value gap, swept the lows, first order block to the left, trade through it, find support at it, inside here, push higher, and run for those equal highs, or run for the premium level right there. There, see you tap it. Now I want to see that roll over, come back down. And that's a 18, 19, 16, 17, 18, 19 candles, right? That's my TIBS. Keep coming. Now I want to see this level. Now that you've traded back into it and that order block, I don't want to see that high get taken again. And I want to see that just start going back down through 369.75 on a close, and then come back and use this level. Preferably it's no more than its consequent encroachment, and then, or mean threshold, whatever you want to call it, and keep pushing lower and start digging into this guy here. And then I'm looking for right here to here. I'm looking for 353 right there. I'm short on that right now. I'm moving to break even. I shorted right in here. I'm moving to break even. So now I want to see this whole price. I want to see us trade through here now on a close, take this candle out and keep coming lower. And I'm risk-free in that trade right now. And as soon as it takes that low right there, I'm going to pay myself at that low just because it's lunch hour. And I want to make sure, oh, there you go. I'm going to buy one back there. Thank you. Now I'm risk-free and I've taken a profit right there at that low. Now, what you want to see, now see how it's done exactly what we said. Exactly what we said on a TIBS, using my TIBS tool and a level that we're looking for support level we were looking for to take money. We've literally 2 minutes. You paid yourself a little bit of money. If it comes back and takes me out, I don't care. I just got paid coming in here off a precise TIBS level that I called as we set that up. Now I want to see this level. See that get closed through, and I want to see that candle really give me some support now, come lower. The moment you trade through the mean threshold of it, like there, see that? Trades through it, and then what does it do? It comes back to the mean threshold, goes lower. Oh, we're making some money, funny. Moving a little bit more into profit. I'm just going to let that run now. That makes sense to you guys? to get the precision we just saw right there. And that's a 1 minute chart. You ain't going to find that kind of precision unless Michael's talking to you. I'm moving way into profits now. Pay the trader at 353. I've got stop losses pretty tight. I don't even want to see it get back into here now. Now we've just give that. I'll let you come back to 365 and give it a kiss. But I don't want to see it come back up here, though I feel like it might just because of this chop that we've got going on here. I really want to see it just keep coming. Come on down. Be the trader. Let's go. How's the Tibbs calendar project coming along? Oh, abs. It's painful. It's painful, my friend. There's so much I want to do with that. There's so much teaching I want to do with that. Remember when we were discussing that down in Albuquerque in your town? And I'm like, man, there's so much I want to do with that. This is the kind of stuff I want to teach on there, but it's trying to get the concept in my head out on paper. But I haven't, I'm going to try and get one ready for October. See how we came back to that candle? Tap it. I don't want to see it come back up there again. You want to see it keep coming now down to this consequent encroachment 353. Tapping an old low, tapping a low, and bounce. This is the kind of stuff you do not want to see it start climbing. You want to see this stay open. It's breaking away and just keep coming lower now. Let's see if we can't get all the way back down to this regular trading hour gap. Remember I said I'm not writing that sucker off today? And we were looking at maybe 11 o'clock lunchtime. Hey, ask and you shall receive, man. Okay, stop coming back there. I don't like all this tippy-tappy stuff here. That order block there is my stop loss. Now we've traded below it, and we've come back to it right here. Give it a little kiss. I don't want to see it trade above it. You see how this reverse here? We've taken out lows. Watch this. So this is the change in direction you have to be prepared for. My fail safe is right here. Stop loss is sitting right above here. Fail safe tells me that if we get through this level here on a close and take the candle to the left, which is this guy, and we close above it, then my stop loss, which is sitting right there, is going to get hit. My fail safe says if we start closing above here, I'm on the wrong side of this, it's going back higher. That's fail safe, changing the state of delivery. Now you got to say to yourself, look at the range we're in. We've really retraced back up into something really high here. Now, the question is this a bull trap? We'll know it's a bull trap if this rolls over here now and starts coming back lower. If it trades through that on a close, which it just did, I'm getting out of my trade. I'm closing. because I'm on the wrong side of this. Now the potential is for this to take that out. That's fail-safe. You got to know the difference about, I want this. I got to give up that idea if I'm on the wrong side of it. Don't marry the idea. Stay on the horse. Now you come back and give this a little tap right here. Before you take that, give this a little kiss anywhere inside here, all the way down to here, and then look for this high to get taken, or that high to get taken, then that one. That's a good example right there. I've just told you about how to recognize change in the direction and a fail-safe and how a fail-safe works. Now imagine that doing that with stocks, bonds, whatever you're trading in. So now I want to see how the body here, we're starting to get a body above the open or the close of this candle. You still want to see that come down one more time into here. If it doesn't and just keeps marching higher, you'll see why I got out of my trade before my stop loss gets taken. So for me, I'm out of this, and I'm more bullish than I am bearish right now. But there's a potential this could be a bull trap still, because we have not closed above these two candles or that last candle to the left. We have not closed above it. So this could turn out and still come down and hit this. And I go, fair enough, you got me. So here I'd be praying for this to be a bull trap, but because we have a change in the state of delivery, I'm out of the trade. So we'll see if this continues going higher now. And imagine my stop loss would have been sitting right above that candle right there. So we're looking at, I would have hit it right there, 378. So I got out down here, and there you go. And it goes higher. Changing the state of delivery, my friends. That's how you do it. That's how you do it. Fail safe. Incorporate it into your trading. Now that could be just a little sweep on liquidity right there. You see that? You just popped up above it, and we're inside that little discount SIBI. What you want to see to go bullish now and start saying, I want to target this consolidation here and these potentially old highs here, is I want to see this and this get taken on a close and use them as support to push higher into that range. Because the only thing I can see up in here is the first one's been hit. Second one's been hit. I'm looking for in these little imbalances you see in here. There's a bunch of little tiny ones. And again, this is what you get for high resistance liquidity. Pull your fib from high to low. Right here. Where are we inside that range? 50% already. We've hit it. That could quite easily roll over and go into a bull trap. We have not had a body close above here yet. So we want to get a body right above 397, and you got 20 seconds. Every time you see that, I go, oh, I'm glad I got out of that trade now. See this one here? Body trades above it right here. You come back, give it a little kiss right here, continue pushing higher. We're into the premium box right here now. Now, if you see that premium box with that last piece at 386 get taken on a close, we're going higher. That is box to box, discount, premium inside that little small range there. Discount, premium. Now you're through that level with a wick. Get a body through here and look for that high to get taken. And look, we're gunning for up here now. That's staying on the horse, man. I think that might be it for me, you guys. That's the start of my first day back. I hope you guys got to learn something. I hope you got to enjoy a nice little I gave you both sides of the market here. You've had some super laser precision stuff. If you like what we're doing, hit the like button. I do appreciate it. That does help our channel. And if you're new to our channel, subscribe. We're here every day. And we're just here to help you improve the quality of your trading. No one's after anything. I'm not trying to sell you anything. We're just trying to help you out, get better at your trading. So it's a pleasure. I've really enjoyed hanging out with you guys this morning. So bull trap. This one wasn't a bull trap. This one wasn't a bull trap. Watch this one here though. Next one is you want to go, I want to trade to the next one. There's your imbalance. We've traded through it. Now you want to see range extension. If you trade back through that level right there at 381, then you're not going to get that range. Typically now you say this is bullish. I want to see that go higher now because I've traded through it on a close. I've come back into the imbalance or the BISI. Come back into that BISI and I want to see that hold price and start pushing higher. As long as the body does not break 381, I'm bullish. Thanks, Ollie. It's a pleasure to be back. I'm enjoying this. It's fun. It's good to be back. And I hope you guys made some profits. I got a little bit today, so I'm happy with that. Let's see if we can't. I'll be on the Telegram channel if you guys want to chat on Telegram. You know me, I'm gonna hang around here for a while. My wife's not back till 1 o'clock anyway, so that's another 3 hours for me. Oh, this is good. Give that a little kiss right there and start going higher. Yes, I agree, Ali. I'm long as well. I like this support. You got off 377. Good for you, man. I like it. Well done, Ali. Look at the range you're in now. You're up in the premium level. I'm going to I'm moving to break even. I like that trade. I'm just at the break even. It's lunch hour, so I don't want to mess around too much with the. This could be returning back into this candle here, to the top of that candle there. Some other important levels. You see how they overlap? They're much cleaner when the price action is cleaner. This is high resistance stuff. You got to be prepared to say, look, I don't want to be playing in this stuff and forcing trades. Don't want to force trades. High has been taken. Optimum trade entry reversal zone, 75%, right off that guy there. So if we lose this candle, its mean threshold on a close, then I start going, the potential is to run back to the areas that we didn't get. We didn't get this chance here. So yeah, see that? Watch this. That's why you pay yourself, man. That's an internal range liquidity. 70%, 60, 75%. Move your fib tool, or sorry, your stop loss behind it. So if you're in long here, as soon as you get to 62%, move to 50, break even, pay yourself. You get to 70 right there, move to 62. and then you hit 75, move to 70, and it would have come back and taken you out there. If this reverses now and comes all the way back down, you maximized internal range liquidity with trade take profit model 1. We're through the mean threshold of this. I'm not bullish anymore. I'm into this range here, so I'm looking at these discount boxes. These ones that were never really struck firm, I'm looking down here now. Watch that candle get supported, traded through. If it gets traded through, look for it to provide support to come lower. Again, see how we were looking for, we're gunning for this stuff up here, but a change in the state of delivery says, nope, if we break through that candle's mean threshold, which we did, and then we traded back to the mean threshold like we did, and now we're going lower. You've got to that's your fail safe. You've got to be prepared to say, I'm on the wrong side of this. It's coming back against me. Maximize my profits, take my money, move to the sidelines, and wait for something new to set up. We're coming back into that area we never got a chance to hit last time. See that? It's coming back to get it. Remember this one? We didn't get a chance to get it. Keep your eye on it. It's one of the questions I gave you guys on the Telegram channel under the Coach's Corner. I said to you what was specific about DAX down here. This is exactly the same thing it's setting up from that DAX day trade I was telling you about. And why wicks come all the way back down into there. I gave you guys that as a question for you to kind of do a little research on. So we're right off this guy here. You want to see that hold price now and shoot back through that little imbalance right here to continue going higher, to look for the next price leg higher. If it doesn't and continues to eat through that mean threshold, which it's already coming into now, then look for this guy here. Done. Look for here. Here's your first one. There's your second one. There's your third one. %, sitting right here. So we have a body traded below this level. So you can come back into this level's mean threshold. I want to see this stay open, or just come back in and do a institutional order flow entry drill and can keep coming lower. But just a simple tap is fine. Let that run. Are you still in long, Ollie? Give yourself enough. If you're going to go, you're going to give yourself some wiggle room. If you're in at 377, you want, 377. I wouldn't want to see it get back through 377. You're at 376, came back, give you a little kiss. Now you want to see it get above here. It's got to close above 388 for me. Let's get another price leg higher. Again, I want to see it come down here. If it doesn't come down there, fine. I don't care. Change in the state of delivery. I want to see this get taken then if we're going to go higher. If not, we'll get down here. That mean threshold is still holding price for me. So I'm still bearish until I start getting above here. So I'm still looking for this down here until proven otherwise. So if I'm short off there, I'm short with a stop loss sitting up here and a fail safe sitting right here, because that's where my fail safe says change in the state of delivery. If I close above that, it's going to take the high. So I'm going to save that little portion of my losses there. I'm not going to take the biggest loss that I'm prepared to take. If I've got 2% or 1% risk on my account, I'm not going to take the full 1% or 2% because my fail safe shows me that we have a change in the state of delivery. So just remember that Failsafe really is. It changes. That's the moment it changes direction on you. And if you're here every day, you'll see what I mean by staying in the market, staying on the horse, and watching these candles every single day. This is the only way you're going to get really good at this, is if you recognize all the candles and do all the work. Too many people go, this is boring, and they leave. They miss great opportunities to study price action at this choppy, crappy level. If you can still stay on the horse, your level of trade is going to go, your experience is going to go through the roof. Stick around, man. Stick around. You'll see. Good to have you back. I'm in for a long. No, I paid myself at 390 and then the stop loss hit break even. Good for you, man. I'm glad to hear you got paid. Even if it's 20 freaking handles. Or 15, 13 handles. Good for you. Pay yourself a rejection blocks. You got that right, brother. You got that right. Okay, so here's your failsafe right there. I'm out. I'd be out of that. I'm not in it, but I'd be out of it right there. Just because we've started trading through that level now. Now we're looking for a long. This looks like another nice price leg higher. Delicious. Who's calling me? Hello. Wrong number. I can tell those little scam artists a mile away. Come back, give it a little tap. Remember I was telling you to look a little tap? Now you want to go long on that. If that's a long, a little tippy tappy. Pay yourself at the next little high there. Yeehaw! Let's go, baby. So long there. Stop loss, you want to see it just below this level right here, because that's the fail safe, right? It's lunch hour. You get your ass handed to you. You want to make sure the body trades above here and use this candle for support. And you want to keep coming higher, aiming for these objectives above you here. What is the Prince of Nigeria? The Prince of Nigeria? I have no idea what you're talking about. Out. You see that? You just got no body. This would be a crazy ass bull trap. No body goes above here yet. Literally get a little wick up in there into this order block here. And now we're trading back into this and through this. See that? You want to see that, tap that and go. So we'll see where the wick is, because now you're between here and here. A new internal range, little liquidity here between that low. This is why you got to play with each little tiny range you're in. So all the way back down and fill that fair value gap. That'll put you at 50%. So see this fill, and then turn around and go back higher. So far, the bodies are still staying in here. Wicks did a bit of damage. Keep coming. Keep coming. No body went below that, so I'm not worried about 50% just yet. Wick. Mean threshold right there. See that? So you're between that mean threshold now and the bottom of this inversion. Keep coming. Eat through it. Start taking out the high. Get a body above this thing on a close now. And now that whole section there becomes important. See the bodies above there now? Look at that. Came back. Give it a little kiss. Precision. Look at that precision. Start moving higher. You do not want to see this candle. I look at the very last candle. Yes, Michael does look at all three of them. And yes, you do and can look at all three. But for me, the last candle is the most important. So in terms of strength, I want to see that wick, hold price, and just leave. If you're strong, you're not even going to come back from there. You're just going to keep going higher. Like that. What is the Prince of Nigeria on the phone? Exactly. When they call him, hello, Darren. Hello, Darren, how are you? It's like, okay, goodbye. You're trying to buy something for me. I'm not trying to sell you anything. That is lovely. Now let's eat our way through here. So you want to see now, I want to see acceleration. Accelerate, accelerate, accelerate. You want to see this start really picking up the momentum now and really pushing fast through here. This is consolidation, so it's been worked like crazy. I want to see it really pick up some speed now. Get through here and start aiming for that other objective. We're looking for price to get through to give us a higher bias or a lower. So you want to see this accelerate, accelerate. What's it, the Prince of Nigeria? You see what I mean? Like that is like beautiful precision right there. Body above, come back, give it a kiss, go. Move to break even and let it run now. See how we want to see this accelerate through here? It's been worked, right? So it's going to make an attempt to just drive right through that and start pushing higher. Like run right for the highs. Leave a gap in here. I'd be all right with just a wide open gap and just let her run. Now I'm moving to break even again. I'm in profit there, so let her run. So you get a body up there. Get a body up there. You don't want to see just pay yourself at rejection blocks. You want to see a body get up here now. Just don't freeze on me. Get going. Get up there. Moving into profit some more. I want to see this close above it. Get a close above that level. Look at that nice little gappy. I like it. Little imbalance. Get going. Get through here now. You guys are liking this? You like this? If you like this, thumbs up, man. Subscribe, like, tell your friends. Get everybody in here. Let's help them out. Let's help out some people. There we go. Now let's get a trade above that level right there. A close. I've paid myself again. Let's go. Accelerate, baby. Accelerate. All right. So now that you've got this trade above here, body's above, closed above it. Now I want to see this hold price and go higher. Now, if we keep this closing above here, then I want to see this hold price. Remember, we talked about this a while ago, like an hour or so ago, hour and a half ago. We said this level was important. And look at it now. Broke above it. Tap it. Go, 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 go. Now I don't care about this. I don't want to see this. I don't want to see any of this. I just want to see it go. This little box here, I want to see that hold price. I don't want to see it rip through it and come back down again. Otherwise, you have to change your mind back to this level here. And you don't want to see my stop loss is going to sit right in here. Close. There you go. Smashify it, baby. So I gave you these key levels, why they're so important, and how they're like precise, how you can really nail a precise trade. And I've just given you some down trades, some up trades today. And even in this messy consolidation, I've given you some awesome precision. Like right off of there, it was like delish. See the support? Remember I told you if we can get through here on a close, come back, find support at it, and you go higher, look for further range extension, right? And that's what we got. Now I want to see this order block act as support, as a propulsion. I don't want to see it become the peak, roll over and come back through this level. So we do not want to see this get taken on the downside on a close, because then we're looking for a return back into this candle, these two candles here. Are you guys still with me? Anybody in here still? What do we got? Oh, there's 23 people in there still. Anita dig. That's funny. Anita. Joseph, you're here. Good man. So stop loss is sitting in here. It's a valid place. Consolidation, CAM model 1 entry. You want to see a tippy tap of that, and then a continuation on the upside. I'm out now. I want to see this hold price. I didn't even want to see it get back in there, so I'm out. So watch this here. So this would be a stop loss. Fail safe for me was right here. Stop loss is just below that last down close candle. So here, see how we're hitting into it now? So we didn't retrace into it before. Now we have. Now I want to see that go. It's got to get higher. Otherwise, you're going to have to start pulling your fib from here to here and say, what's 50%? 50% still puts us in the middle of this breaker. But I like the little tap, 50% of that last wick. Remember I said I like the last candle? Look at the wick. Look at 50% of that. The consequent encroachment, or sorry, the mean threshold of that last up close candle. Look where the mean threshold hits. Right on my Tibbs at 58. That's a Tibbs 58. Will you see my little buttons there on the end of them? That's a Tibbs. Now I want to see that go higher. It doesn't matter. I don't care that I'm out. I've made my chunk of change today. Let's see that accelerate higher now. So we're starting a new hour. That's why all the buttons are gone. My Tibbs works on every time frame. That's why I know it's fractal. Yes. Right to 50%. I love that. I love that kind of precision. It is a good day, Dell. It's a good day to come back to anyway. My first day back. It's nice to hit you guys some solid trades. I like it. And this is, do you think this is the summertime, man? This is the summertime. This is when price action's shit. Right? And we're still nailing it with some laser precision. There we go. Higher, higher, and higher, my friends. Higher and higher. All right. So where are we going from here? Where do you guys want to go from here? What's your next objective? 427 or 418? Why did I pick 418? Why is 418 a potential sticking point? And it's okay to be wrong. Two little up candles. Why is 418 my sticking point though? Why am I looking to see this point right there starting to stick? 418.50. Why is that going to be a potential sticking point? Volume and bounce over here. This is what you're talking about? That's 416. That's what that's where you just hit right now. That volume imbalance. But why am I saying 418.50? You're right, Hans. That's a nice little upside objective to aim for. So it hit it perfectly at 416, but why 418? Or why 418.5? And it's a 1 minute chart. That's the only chart I'm on. So you don't have to go hunting through all the other charts for an answer. Anyone? Bueller? Little gap. That's the 416 gap. MF, yeah. Ollie. Let's just see if it sticks there. See if I'm right. And all I want to do is see it come up, hit it, bounce on it, come back down a little bit, and we'll see if this candle here provides support. Yes. Dickie. You're right. That's the answer right there. Good one, Dickie. That's going to be your new name, Dickie. Because I'm not going to keep saying the whole damn word. I used to work in a bar. People used to call me at the bar. Hey, could you see if Anita Dick's there, please? And I'd be like, Anita Dick? On the phone? So you're going to be Dickie. So mean threshold of this last up close candle is a potential sticking point. That's 418. So let's see if we get a little stick there, a little bounce off of that, or we just charge right through it. That tells you a little bit about price. For me, it tells me a little bit more about price, how aggressive it is, or how we might be just inside this big range and then just roll over and come back down for 130 again to start running back down again. I've been long since 401. Excellent. Good for you, Ollie. That's a man who capitalizes on an opportunity. You see it, you take it. Right now, we're kind of just stuck inside that little imbalance right there. See, if I pull this one over, you can see why those areas are potential sticking points as well, right? That's why these imbalances, you got to look them on your chart. Look at them on your chart, because look at that right there. That is inside that little imbalance. Stretch out your charts to find them. Highlight them, move them out, because those are upside objectives you want to aim for, and you want to see if there's a sticking. Look at that precision at 14 or 416.25. If that holds, great. I'm not even worried about my mean threshold because we're sitting right at the bottom of the order block. The last up close candle before running is the parent order block of this whole run below this low and the run below that low. So it's like a big breaker. You have the low, you have the open, which is where you're sitting right now. Also, there's an imbalance sitting right there, filled. Is it going to hold, or do we get all the way up to the mean threshold? These are all like laser strong, weaker. The weakest one is the mean threshold. If you make it all the way up to there, that's where I'm looking for that last ditch. So it's like a line in the sand, so to speak. So that order block there, the big parent order block, that initiates this big run all the way below that low, and then, you know, takes it even deeper here. I know there's others in here, but it's like, to me, the parent one of the larger range of the leg. So look, see how we're through this one already? We've closed below it, come back into it. Now I'm looking for a short here. So unless we start closing back above this, that's fail safe is saying short. And short to what? High to low, 50%, looking for here. And then you have to decide, am I gonna trust these things over and over again? Bang, right on the 50%. Done, like dinner, man. Look at that precision. See, short. Boom. Only going bullish again until it gets back through there. Fail safe tells me I'm on the wrong side of it, at least back to 50%. If it hits 50% and keeps going higher, even better. That's good. But for a short to 50%, that is it right there. Bang, hits 50%, close above this now, and now you can get back into going higher. So even inside that small range, 50%, just past it into a discount is all you need. That's all you need. And you saw that happening right there. And now we still don't have a body above here. You still don't have a body above here. So you're still bearish. To right here. Inside this internal range of liquidity. Discount box. Premium, discount. Box to box. Pay yourself at 50%. Pay yourself at 62%. You're going to move your stop loss. Right now, move it to 60%. Oh, look, we hit the box. Oh, look at that sexiness. My friends, that is box to box, my box to box idea. Now you want to see it close below here. And away we go. Change in direction. Did you guys catch it? Do you guys understand it now? Why your change in direction is your fail-safe? Does it make sense to you? Dickie, do you get it? Tell me you understand it. So now you want to make sure that this candle gets closed below. If it's not, see how it's opened right on it? Don't know why it popped into my head. It's like, have you got it, Dickie? You got it, Dickie? He's got it, Dickie. All right. So you're looking for this to close here now. You're inside this range, internal range liquidity hunt, done. Small little range, capturing the maximum amount you can out of that. You're down to 79%. Pay yourself. Now wait, because you have to close below here to come lower, and you have to close above there to go higher. It's a small little range. Do you want to play in that or not? If you're still in this long from here, then great. You don't want to see that level get closed below right now. And look how precise it's been hitting it. Closed there, opened there, closed or tapped a low there. So now you want to see that level get closed above from here to here. And then you can say, good, we can resume going higher. It's really good, really great to have you back, Darren. Good learning, good entertainment. Glad you hear it. You're in for it, Hans. It's I know you're up late because we were having some fun there in London. I tell you, England's a good place to trade both markets. That's why I want to move that way, even to Greece. See, Greece would be like the ideal place for me because you can get up in the morning, have coffee, then you can go do the London Open, trade there for a little bit, go have lunch, go enjoy your day, come back, New York Open, trade that, trade to New York after New York lunch, have it after dinner, before bedtime, you finished your day, and you're done. You're in the most optimum place to trade both markets. There, see how we've traded above it? Ooh, look at the close above, opened. Now we're going higher. Change of direction. Stay there. You don't want to go below that right there. Stop. Look at that freeze. Tell me that's not a sensitive level. Ting, taps it, goes back up, taps it. Now you're going to drive through it and close below it again. Then I go back to this guy. Compression, squeezing, squeezing, squeezing. This, to me, I'm 51% bullish now because I'm trading above this level. I'll be back to neutral if we close below that right there. If we close below it, I'm back to neutral, waiting. Right now, I'm 51% wanting to see that go higher. Mr. Darren, did you ever start trading props? Prop firms? Yeah. I'm in I'm in one. I don't like to advertise for them but I'm in one, yes. I'm not crazy about them, but you know, they're all right. It's better to trade your own money. They're fun for entertainment. I wouldn't trust them overly, but they've been known to do some good payouts. To me, it's better to trade your own money because you make one stupid. They're looking for one excuse not to pay you. They'll find it. So you're at the mercy of somebody else, and they get to mirror your account. They get to steal your trades. You know, and they can refuse not to pay you. So it's too much stress. It's okay to play. You got to really know how to trust a company or a prop firm. See where they back down to that little guy right there again? Tapped it. See where it closes. Literally right on that level again. See that? Tell me that's not precise, you guys. That is not a mathematical formula. That level we were talking about literally closed on it. Wicked all the way down to mathematical formula. Do you think that's just coincidence? I don't think so, man. Those are precision data points. Precise data points to end on, reach for, now start pushing higher. Let's go. Get up there. Mean threshold. 413 and then remember 418. 418.50. Okay, I think that's going to be it for me. It's just coming into just after lunch now, so the 2 o'clock. Look for 2 o'clock to do a potential turning point. 1400 hours. Okay. Otherwise, that's it for me. I will see you guys tomorrow, bright and early in the morning. It's good to be back. Thanks for all your support, you guys. I love you all. All you people that are new, welcome to the channel. We'll see you again tomorrow, and let's nail some really good trades for you guys. Again, still bullish until looking at 427, 418, seeing if we get some instability or some resistance there at 418. Yeah, baby, keep coming, keep coming. And anyway, I'll see you guys tomorrow. Have a good one. Enjoy your day. Remember, practice your fail safes where you expect price to fail. And if it does, mark it on your chart. You don't have to have money on the line, but just have your marks on the chart saying if it fails there, great. If it doesn't and continues to go higher, why did your failsafe fail? Because you're obviously not in the right spot, or you picked the wrong failsafe. Make questions, ask questions. We're on Telegram, Hadi will help you out. Any of the guys will help you out in there. They're a great bunch of people. They're all willing to see you succeed and help you succeed. So tune in, jump in on the community. Everyone's there to help. We don't deal with trolls, and we certainly don't deal with idiots. So if you're going to come in and acting like a dork, you're gone. We're only there. They're serious people that seriously want to make money and practice getting really awesome at their trades. So you're welcome to join us there. Until then, I will see you guys tomorrow. Thanks again for tuning in. And this ThetaWaveTrader, check it out. See you later tomorrow.